When I met you 10 years back in your office,
Correct.
it was a post-revenue situation, and इन्होंने मेरे को मना किया था इन्वेस्ट करने।
काफी चीजें मना करते हैं। I always wanted to be an entrepreneur. I never knew how to raise capital.
We were the first investor in Oyo.
Oh, I did not know that.
We raised 12 million. I've given back 18 million in cash. So we had EazyDiner, we had Veeba, we had Oyo.
When the company is doing well, everyone aligns. When it's tough times, that's when people start becoming self-preserving.
We are friends. We've been friends before we even reached. For 8 years, we never did business together. Most luxury hotels have the worst, but great institutional cheese.
I think the best investors are able to identify a good founder within the first 10 minutes, whether that person is going to build something out. What is it that you look for? Kapil, wanted to thank you for making this happen. When I told Kapil that, he's been such a favorite guest on the BarberShop, and you said, let's get Deepak in and talk about his investing story. He'll be a great guest for the BarberShop. And I met you 10 years back in your office. You remember?
Correct.
9 years back in your Worli office.
10 years back, 2015.
16.
Was it 16?
2016.
Okay.
When the company had just started, or maybe actually 2016 end, because it was a post-revenue situation. And इन्होंने मेरे को मना किया था इन्वेस्ट करने।
काफी चीजें मना करते हैं।
At that point, we were we didn't know much about personal care. And we were like, I was asking him, explain personal care to me. How does it work? Give me the GMs. I said, I know food and beverage really well. And that was when I was starting our journey into personal care.
Yeah. So it was a lovely meeting. I had met your team. Chaitanya at that time was there. And I continue to work with the DSG team. Like our investee company, Go Zero, has Hari on the board.
Yes.
So we meet. Kiran is a batchmate from IIM Lucknow. BarberShop is an investor in Go Zero along with you guys. So the world is, kind of conspires to bring people back. But Kapil said that, let's do a three-way chat. Because we've had a VC founder guest on the BarberShop, which was very successful. So we had Manu from Sauce and Ankit Chona from Hoko. And they did a fantastic conversation on their relationship, on how they learn from each other, how they're building Hoko together. And when Kapil said, let's get Deepak in, I was like, this is a great opportunity to do again a founder investor, with, kind of going deeper in their relationship, in their stories individually, and of course the story of DSG. We've covered Postcard and EazyDiner and Oberoi at length. But Kapil, I would love to kind of start with a little bit of my own trumpet situation. So you do still get feedback on the BarberShop episode?
So yeah, I still get it. I as early as late as or as early as 2 days back, and people are still talking about it. And I think one of the biggest seminal moments was I was like I was telling you, I will not name the company. I was at the Postcard on the Arabian Sea on a personal holiday, and at my hotels when I'm holidaying, I just don't want to intrude, because one of the big things about holidays is that it's private. It's you kind of retreat into, and Postcard is all about retreating into your private space. I'll generally always go and say hello, but I'll never say hello and introduce myself in my own hotel, because people are holidaying, they're on their own world. And so this gentleman reached out to me, and he's one of the biggest foreign institutional investors in India. And he said, I watched the episode. I know you from the episode. I said, oh, great. And he says, I watched the part where you said you left your job at Oberoi to become an entrepreneur. And he says, now I run this biggest FII in India, and I just want to quit and start up. And that was so inspiring. And I said, my God, means I'm sure even when I was running Oberoi, this guy would be making at least 10x of what I made even at that time. And now he wants to quit and open his own shop, actually. What I really liked about being here even last time and even today, and the kind of messages I've got, is I think it opens up avenues for entrepreneurship. And I think it's extremely inspiring from that perspective. And there's a story. Let me tell you a story. So many years back, I was a big fan of President Kalam. So I knew that President Kalam was speaking at a hotel in Delhi. Okay, and it was not the Oberoi which I was running, but he's speaking at some other hotel. So I went to listen to President Kalam because I was such a big fan. So I called up the media house and I said, I want to come and listen to him. So he says the role of teachers, and in this particular case, I'm saying, whether it's Deepak mentoring his companies or whether you running the podcast and getting so many people on the podcast, I think the role of teachers is very important. And he said something beautiful. He says that, I was born in a very poor village. I had to walk 10 kilometers to even go to school. He said, but we had a very good physics teacher in his school. He's saying, so imagine in a remote village in Tamil Nadu, okay, he had a very good science teacher. I think he didn't say physics, he said science. And I think that teacher's name was Mr. Ramanujan. Maybe I got the name wrong, but that's what he said.
You're right, I've heard the story too, yeah.
So Mr. Ramanujan one day took us to the sea. Okay, and he told us to lie down on the beach and look at the waves, watch how the birds fly. He's saying that day, lying on that beach, a poor boy who could not even afford a pair of slippers decided that he'll become a scientist. He's saying, so Mr. Ramanujan, a poor teacher in a poor village in a remote corner of India, did not know that he was inspiring this 10-year-old to become India's top scientist at DRDO, ISRO, whatever, wherever he went, and then one day be the president of the country. So sometimes in life, you don't know who you're inspiring.
Yeah.
Yeah, and I think what you're doing with BarberShop, and I think what Deepak is doing with early stage companies, and that's why I thought it's actually, I would have preferred if I was out of the picture really and both of you spoke, is so important, because I think it's that role. And sometimes unknowingly or knowingly, I'm sure Mr. Ramanujan would not know that one of his students one day would be the president of India.
Yeah.
And maybe one of the most admired presidents.
Yeah. Well, I was talking the other day to someone, and we were thinking that political figures are so polarizing today. Anyone who, even Mr. Gandhi, who's on every currency note, like is instigating positive and negative responses from people, which is something unimaginable, right? But the one person I think who collectively gets positive response about is possibly President Kalam. Like this, no religion, no man of science, man of service. So amazing. But Deepak, welcome to the BarberShop. I know it's your first time.
Thank you very much. Pleasure to be here.
How do you and Kapil know each other? How long back do you guys go? What's the story like?
I started investing in India in 2003, 2004. And one of my investments was a industrial bakery business, a company called Baker Circle. And the promoter is a gentleman called Devlal, who's actually trained as an hotelier. And Kapil and Dave worked together at the Hyatt for a while. So that's when I met him. I mean, Kapil was at the Hyatt. We met, we hit it off, we kept in touch.
What year was
this? 05, 06.
No. This is, I was at Hyatt 98, 99.
Oh, wow, you guys go back a long way.
Yeah, 98, 99. But I think maybe we just bumped into each other, but I think we really met when I was at the Trident in Gurgaon.
Yeah, that's when we really met. That's when I got to know him.
Yeah. So and that time you were running a thing called India Art News.
That's how we may have connected. I had a habit I was I am an art collector. And in the late 90s, early 2000, I had a blog when I was discovering Blogspot. And I used to write a blog on Indian art.
Okay.
Kapil was into art and sort of we connected. You were at the Trident. And I was then in 05, 06, I was coming to India quite a lot. And we were working on a project in Gurgaon and I was staying at the Trident. The project I was working on, then sort of, I was part of a consortium that was sort of funding the Westin in Gurgaon.
Okay.
I started staying at the Westin and then the Oberoi opened and Kapil called me saying, why aren't you staying at the Oberoi? And I said, let's see. And one day he forced me in and I never turned back.
This Oberoi is beautiful.
It's a spectacular property.
It's beautiful.
That's Mr. Kapil in action, right? The quality, the execution, it's all about the service. Anyone can build nice buildings, but the ethos and the service element and ensuring every guest feels like he's at home is very, very hard. Very few hotel brands pull it off. I think in India, it's only been the Oberoi and now the Postcard. Okay, and that's the only common thread is
Kapil.
Mr. Chopra.
Yeah, and I have a couple of founders in the hospitality space who look up to him. I don't know whether you ever met Rahul or said, they speak about you so fondly. That he's the guy who's defined hospitality, luxury hospitality in India is Mr. Chopra.
100%.
So I think they watched your episode multiple times and taken notes as well. How did the professional relationship start? What were you guys doing at that time?
Interesting. I have my recollection. Let Kapil start first, and I'll bring my.
So he was doing Indian Art News. There's actually nothing. So
what all were you? Indian Art News sounds like a very different thing.
Put it this way, right? At that point, I was working for a venture capital fund in London.
Okay, which one was this?
Reuters Venture Capital, corporate venturing arm. I had left Bain, and my boss said, Deepak, you're Indian. I'm like, yeah, I'm ethnically Indian. Okay, now you can go to India and sort of look for things to do. I'm like, sir, I was born and brought up in Singapore. I've got no family in India. I don't speak any Hindi. He said, no, you're Indian. You go to India. So I started coming out to India literally every 8 weeks.
Which year was this?
Starting February 2000.
Okay.
And by coincidence, a classmate from business school, Minal Vazirani, had founded Saffron Art. So I was an angel investor in Saffron Art. I started blogging about Indian art. I started coming to India every couple of months. And Kapil liked Indian art. So we connected on Indian art. And that's where the relationship began.
But we never did anything from 2000.
You were a hotelier, you were a venture capitalist.
Yeah. So we were just, he would be a guest at the hotel.
We
We'd talk about art.
we chat.
EazyDiner would only happen in 2014.
Correct.
So he started coming to the Trident in Gurgaon from 2005. So 2005 to 14, we never spoke about investments, venture. I didn't even know what venture was.
Or working together in any way?
Never.
Nothing formal. No, we became friends over time. And then one of the pet peeves I had, so I was living in London at that point in time initially, and then I moved to Bombay. So I moved to Bombay in 2007. So
as part of Reuters?
DSG
by then?
No. And prior to this, I co-founded a firm called Beacon India, private equity.
Okay.
And I was living in Bombay. And what annoyed me was, when I was in London, every booking was open table. You booked online. Or even if they didn't have online reservations, you would pick up someone would pick up the phone.
Correct.
I moved to India, no one's picking up the phone. You couldn't make a reservation. Half the people didn't speak English. I used to complain to Kapil, what is going on? Kapil said, someone will start it. 6 years later, no one had started it. Then we were at a meal with Veer Sangvi. I told Veer, and this is ridiculous. So we told Kapil, why don't you start it? I think that was a seed. And he said, no, I'm running Oberoi. How do I do a side gig? I said, why don't you leave? He said, how can I leave the Oberoi? Okay, so that was the genesis, I think, of the idea.
And how long before EazyDiner was this conversation?
I beg your pardon?
How long before EazyDiner was this conversation?
2-3 years.
2-3 years. We said, I had a very straight view that time. And actually, Veer has written it in an article today that, it was his idea, but he was not sure. And I told him it's not going to work. And there was a concept called the daily meal. And I was always betting on aspirational India. So I told him, I said, what's going to work is if we put out a great piece of food content every day. Now, I just look back on it and said, if I did that, I would have gone bankrupt by now. Or maybe I would have still been at the Oberoi, maybe running the company, because this thing would have never worked out.
One piece of food content a day sounds like a really cool idea.
One piece of good content on food a day, but I think there's so much right now happening. So I wanted to do the daily meal that time, and I came to him, and he says, no, it's not going to work. You should do reservations. I said, boss, nobody reserves in India. And but nothing happened till that time. And he was very clear, Kapil, you should do it. And then what really happened was, then the Oberoi won the best hotel brand in the world, and we were in New York. And, the hotel industry is a very closed industry. Everybody knows everybody, yeah? So I told everybody, I said, guys, I'm coming tonight. Just, make a booking. He said, why don't you just open your app, Open Table, and do it on Open Table? I said, but I'm telling you. He's saying, well, it'll go into the system and all of that. Made me think. When I came back to the Oberoi, I realized that they were not taking any reservations. There are no books. So it was like the Indian farmer. I spoke about it on the last BarberShop also. And I realized that there was a market and that he was right, really, actually. So actually, the idea to do table reservations was never mine. I wanted to do food, but you see, I always wanted to be an entrepreneur. I never knew how to raise capital. And I didn't understand that gig. You see, when people in India, in entrepreneurship circles, go to IIT or IIM, they've got seniors or alumni to look up to.
Correct.
All the alumni I looked up to were all trying to get the top job in hotels. Nobody was thinking, listen, I'm going to ever quit this and start something on my own. So these are all the people that I looked up to. And the people I looked up to knew better about wine or better about food or better about construction than me. But none of them knew about raising capital or whatever. And so I had no clue, actually. And then I asked him, what do you do for a living, man? Then he started telling me, we look at companies, Kapil. And so that's how it started. Never my idea. I always say this. I didn't want to do online table reservations.
Wow. So that's a good modus. So just to find a problem that you have, find the best operator.
It was the problem I had. And at that point, in 07, 08, I thought it was too early. I happened to, in 08, invest in what has become a very successful sort of a big restaurant platform. I invested in Riaz's Impresario.
Okay.
I was the first institutional investor. I was on the board for 8 years. So I saw Riaz. At that point, he only had one brand.
Social and
now social. At that point, he only had Mocha.
But what a lovely brand that was.
Fantastic
brand.
What
a lovely brand Mocha was.
He had, for the first outlet was at Churchgate. He had grown it. We'll talk about Riaz in the story. But again, at that point, There was Mocha. He had opened Salt Water and had opened Smokehouse. And we would go to board meetings, look at last quarter. So I would say, how are we managing who's coming in? How do you know which days restaurants are full? He said, no idea. No one books in India. And I said, how do you prepare the kitchen? How much materials? He said, people come, we cook. I'm like, high wastage. You can't actually maximize yield. And I said, why don't you take bookings? Sometimes people call, but the habit in India is no one calls. Unless you're Bukhara, no one calls. I was on the board of a restaurant business. I mean, now it's social, everyone knows the brand. At that point, as a board member, as an investor, I'm asking the founder, CEO, why do we not take reservations? It says Indian Zone Reserve. No one wants to pick up the phone. And there's an assumption that when you get there, there'll be a table for you. If not, you'll wait a little bit. And I said, the whole world changed. India's going to change. Indians are going to get impatient because why would you go to a restaurant and wait for 1 hour if you could book a table? So that was, again, I saw it from the restaurant side. As a restaurateur, you could not plan. You had no clue if the restaurant's half empty, half full, how much staffing you need. As a user abroad, I use it extensively. And I kept bitching. And I kept telling Kapil that this is ridiculous, yeah? The restaurants will need it one day. As a consumer, he said, Deepak, you're a foreigner, you have no clue. Indians don't think like you. And that conversation went on for 2 or 3 years, till at some point, Kapil said, I
Makes
think
sense.
time has come. But it was 2 or 3 years of
Just chatting.
And sort of, it was germinating.
And what is your story, Deepak, in terms of how did you see the private equity opportunity in India? Was it through your work as...
Like I said, I joined a venture capital firm in London. They said, Deepak,
Go to India.
Go to India. Hardship posting. No one else in the firm wanted to come to Asia. You go to India. So I started coming every 8 weeks. And I got the India bug. I came to India.
What year was this?
2000.
Okay.
The first time I came to India as an adult was December 98. I'd come on a business school trip. I hadn't come to India for a decade. I came to India. I was hosted by Dinesh and Minal Vazirani. On the first night I arrived, I was staying at their home, meet my friends, meet my classmates. One of the first people I met was Rajiv Samant, the founder of Sula. There was no Sula then. It was just December 98. And the next day, we all went to Goa. Rajiv was there. So I asked, what do you do? He says, well, I'm starting a vineyard. I'm like, what's your background? He said, I'm an engineer. I went to Stanford. I worked with Oracle. And now I'm a farmer. I just kept quiet. I'm like, it's novel. And then we became good friends. And I think over 2 or 3 years, I saw Sula get launched. And I tried to talk him out of it.
Oh, really?
I'm like, you know nothing about wine? India has no history of making wine. And he said, Deepak, Indians are very aspirational. Our climate is perfect for growing wine, for growing grapes. We don't have our own indigenous wine grapes, but we've done our homework. We can bring cuttings in and we'll test it. So I watched him, kept convincing him not to do it.
How old was he at the time?
32, 33.
Okay.
I saw Sula take off. And 3 years later, I said, Rajiv, you're onto something. One thing you have is the ability to watch what's happening on the ground and capture the trend of the Indian consumer. You can see things before they happen. You were born here, you were brought up here, you lived abroad, you see what's happening. And I told him, stop listening to what I used to say. Sula at that point, Sula was doing 2 crores a year, tiny business. But it was still very basic. Bottling was manual, crushing was manual, very few mechanical instruments. And if you go to the winery then, it's nothing like what it is now. So I said, why don't you raise capital and sort of professionalize, mechanize, sort of scale it up? And he said, you said it's not going to work. I said, okay, I was wrong. I was wrong. That conversation went on for about 18 months.
This is a 2 crore profitable business.
No, not profitable. It was early days. It was a startup, right? He had raised family and friends money, no institutional money. He had raised some bank debt. He was doing a good job. He was selling the wine door to door. He was convincing. Keep in mind, this is the first Sula hit the market February, March 2000, the Chenin Blanc. One product. Again, consumers weren't buying the wine.
Yeah.
At that point, and even today, most of the wine is consumed on premise, hotel, restaurant. Consuming wine at home wasn't a thing in those days. Yeah. And he was going door to door to all the restaurants and all the hotels, convincing them to stock Sula. And most hotels said, who are you? India doesn't make wine. But he made good progress. And then he had to train the sommeliers because half the restaurants did not know how to use a corkscrew. They didn't have a corkscrew. Okay, and Sula was the first Indian winery to move to caps. Primarily, caps actually better for white wines, especially if we don't want to age them.
Yeah.
But his issue was even when wines became popular, half the guys did not know how to open a cork. He says, how do I make it easier for the restaurant service person to actually serve the wine? Because most of the waiters in 2000 had no clue. I'm not talking about the five-star hotels, right? His view was it should be democratized.
Correct.
And I was still living in London, still working for the Adventure Fund. And in 2004, by which point I'd come to India 20, 30 times, and I got the India bug. I said, there'll be many other businesses like Sula. I hadn't invested yet. So I quit my job at Reuters. I started my first India fund on my own. And the first ever India deal I did as an institution was Sula. So Sula was my first deal. The fund then was called Gem India.
How much had you raised?
12. Again, it wasn't even a fund, it was deal by deal. I told my investors said, Deepak, we know you, we trust you. You know nothing about India. So why don't you go out, look for deals. If you find an interesting deal, bring it to us and we'll back you on the condition that for every investment you bring to us, you put 20% of the capital. So the Sula, just to give you a sense, the first Sula deal was a 12 crore deal. And this is 2004, when the rupee was at 39 point something, which meant 2.4 crores for me. Because I had to put in 20%. My investor said we'll put in 80%. I mortgaged my flat in London. I wasn't married then. It was fairly.
How old were you at that time?
I was 33, 34.
That's young, man, to take that kind of.
I was convinced. What's the worst case? It was a 2.4 crore. I knew that if it did not work, I'll go back and work at Bain or something. It's okay. And I didn't mortgage to the hilt. It was a big mortgage, but I knew I could service it. I had some savings. I said, done. So sort of did the Sula transaction. And that sort of over a 24-month period, we did 5 transactions. We did Sula, we did a Clear Trip, we did Baker Circle, we did Saffron Art, which is the art auction house. And we invested in a company called Mason & Summers, which is a spirit distillery business. So Mason & Summers went to zero. Okay. All venture deals. Sula became what it was. Clear Trip at that point was for a very long time the number 2 after Make My Trip and Deep. Baker Circle was and still is the largest frozen confectionery maker in India. We supply all the QSRs. And Saffron Art is still the largest Indian art auction house. So that 12 million put together, I've given back about 35 million in cash. Over 12, 15 years. It wasn't. I started in 04. It was only in 09 or 10 did I realize what I had done. Because it takes time. You build a consumer brand. You know how long it takes. It's not overnight.
Correct.
That's when I was very sure that you will see a new generation of Indian brands. And I moved to India with my wife Sona and my 7-month-old son in July 07.
Okay.
And I lived there for 6 years just to make sure that I was on the ground getting a pulse of how India was transforming. And that was the journey of let's spend time in India. Let's figure out. At that point, I wasn't yet convinced that you will build a portfolio of consumer brands. I said, I started. Maybe I was lucky. There was no fun doing consumer only. When I moved to India, I co-founded a fund called Beacon India. We did consumer and we did financial services. I lived there for 6 years. From that portfolio, I invested in Impresario, which then launched Social. So I was on the ground for 6 years, spent a lot of time with consumers. And everyone said, Deepak, how do you find a consumer? I'm like, every Indian consumes. Right? There isn't anyone who isn't a consumer. Could be tier 1, tier 2, tier 3. So any Indian you interact with is a consumer.
Correct.
And as GDP per capita increases, discretionary income and discretionary spend will kick off. Right. So then what did I do? I spent time looking at China, Thailand, Malaysia, Singapore, Philippines, countries that have crossed the threshold or the point of inflection. It's about it's about $3,000 to $4,000 GDP per capita when discretionary spending kicks in. I'm not saying luxury, but when you can make choices. And if you look at all the data, this is in 07, you knew that India would get there somewhere between 2025 and 2030 when it will really trigger and pay off. And watching the rest of the world, it looked like it would take about 10 years to get to a point where a brand has relevance. Okay, Sula started in
2000.
1998 he started. It's not a factory where you can press a button and make wine.
Yeah.
It's an agri-business. It takes 3 years for the first product to even reach the market. It was in 09 and 10 when you could see the potential of the brand. And that's when I said India's time has come. So in 2012, we started DSGCP, by which point Sula had become fairly large, Sephora had become fairly large. I had sold my stake in Clear Trip. And I had evidence to go back to my investors and say, we had a thesis in 2004. It's played out. You've given me 12 million, here's $30 million back. I think now the pace of consumer brands evolving will be quicker. And there'll be more entrepreneurs who are willing to start consumer brands. So that was the genesis and the start of DSGCP. It was very tough raising that first fund. Not because...
How much was the first fund?
12 million.
Wow.
Okay, it was hard because they said, Deepak, why are you constraining yourself to consumer? Look at all the other India funds. They're all tech. They're all sector agnostic. And why are you calling it DSG Consumer Partners?
Yeah.
I said, I'm convinced that's all I want to do. I think consumer brands will become very relevant. There was enough work already done and a lot of analysis on what's playing out in the US and Europe. Why the big giants, the HULs, the Unilevers, the Procter & Gambles, the Mars, the Mondelez were losing market share. And they were not losing market, Pepsi wasn't losing market share to Coke or vice versa. What annoyed them was they were losing market share to brands that were not even 5 years old.
Yeah.
So when you're a giant that's been around for 100 years, you have science, you have history, you have legacy, you have brand. To see someone who's 5 years old, whose factory you would not even call a factory, compete with you is, and they said it's a fad. And I said it's not a fad. The younger consumers have a choice. They will buy the brand that speaks to them. And it's all about storytelling. The product needs to be good. And the stories that you and I listen to are different from the stories our parents listen to. And I've got 3 kids who are now 18, 16, and 11. They don't consume any brand I consume. Okay? They have a different need. They have a different space. And often you don't want to buy the brand your parents buy.
Correct.
By definition. It's not cool. So that just gave you an opportunity in any market, like I did in India, to start looking for entrepreneurs who was building that new brand speaking to a new consumer. It was a thesis, and that's where it started.
And what did you see in founders like Kapil or Rajiv you speak about, or the founders that you have backed? Can you you've been investing for a long time, through cycles, through difficult times, through good times, etc. What are the consistent characteristics that you see in good founders that stead them into success?
Again, I think this is our philosophy or my philosophy. We tend to come in very, very early. Sula was at 2 crores. Veeba and EazyDiner, I'm just using 2 examples, were both investments I committed to and invested before the company was incorporated and before there was a brand name. There was no, I backed Viraj. There was no brand name. We spent 2 days at the Sula vineyard in Nasik saying, what should the company be called? We debated, we came up with 10 names. We both agreed to disagree. Then we were driving back from Nasik back to Bombay, and Viraj asked me, how did Rajiv name the company Sula? I said, Sula is his mother's name. It was a tribute to his mother. He said, that's a very good idea. I'm going to call my company Veeba, after my mother. It'll be a good tribute. And I said, fantastic, good name. He goes off to Delhi, I go off to Singapore. And he calls me 3 days later, you can censor this.
No, we don't need to.
What are you doing? I said, why? He says, I told my wife I'm naming the company after my mother. She said, how come you didn't name him after me? I said, good point. Rajiv had no wife at that point, so there was no wife to complain.
Yeah.
Okay, that's how the story happened. Huh?
I don't know, Veeba like his first name, like Viraj Bell, right? So Veeba, I thought
No, it's his mother's name.
Oh, I had no idea. One of my friends is Bala is the founder of Vadam. Vadam is like the reverse of his father's name, which
Correct.
is Madhav. Is Vadam. That's how he named it Vadam.
No, this was a tribute to his mother, who he credits for his love for food and for all the recipes and the joy in food that he had at home. And again, so the point was, it was backing someone who was passionate there was no diligence to do, right?
Correct.
Company wasn't even formed. And EazyDiner was the same. I thought India had a problem with reservations or just restaurant management as a whole, having seen it as an investor in impresario. Kapil was one of the best hoteliers.
Yeah.
He ran indirectly over 100 restaurants at each of the, between the Trident and the Oberoids, how many restaurants do they have?
90 plus now.
90 plus. I'm saying, how are you managing this? He says, yeah. And then at some point it clicked. He said, Deepak, I think we can do it. We'll tweak the model. We've got to give a different offering. You have to reserve to get the discounts and the offerings we're giving. But he said, unlike the US or Europe where people know or want to reserve, in India, we got to educate them to reserve. How do you educate them? Give them a hook.
Yeah.
No one's going to reserve unless there's something in for them. So that was his. So we debated it, but that was his hook and it worked. So EazyDiner was launched with each. What was the first thing we launched with?
Table reservations.
But there was always a hook. You got something.
Yeah, there was
a
always,
free
so
drink.
we said
something.
We went to the restaurants. We said, what are you going to give so that you get a reservation early? What are you going to give to build a book? Nobody was building a book. So think about it. You open up your restaurant, you got 30% book. Yeah, 30% guys are coming for sure today. So what are you going to give? And we kind of left it open to them. Till date, that kind of still stays really. Yeah. And but he's so right. Now that I think about it, the name EazyDiner was not done. So we had different names. I don't know. It was Grubbit. It was whatever. People said Grubbit sounds like garbage.
No, he had lots of. Even EazyDiner wasn't a name I liked. So he then had an internal survey at Oberoi.
Yeah.
They came up with 10 names or 30 names. He shortlisted 10. And him and I agreed. Whatever the majority vote, him and I will not question it.
Yeah. And there was this branding lady called Gopika Chawla.
Gopika was there.
And I give her all the credit because she said it has to be EazyDiner. Then we went to register it. The S was not available.
Well, then you made it Z.
Then because the S was not available. Later on, we would get that domain name on EazyDiner. But we did not. That's why we made it Z. Okay. And then the Americans spelt it EZ because they said EZ Diner because Z is Z. Okay. So everybody got it wrong there. Also the funds when we went out. So yeah, so it was quite a thing. But yeah, we said, yeah, he backed it. In fact, I still hadn't totally agreed on table reservations when he backed it. I said, okay, you know what? We're going to look at it, but that's not the condition. He says, okay, let's do it. And if you're so bloody convinced about this food content idea that we should put out one piece of food content every day, do it here and do that.
And
let's do it.
There was a food content which I never
read.
And
we had content. So we still did have a content team which puts out one piece of content every day, even today, 10 years later.
But if you span out, right, the bottom line, if you're investing pre-product, pre-revenue, you're only doing one thing.
Founder check.
Only founder. Second thing is founder, third thing is founder. I mean, you live and die by the founder because if you back the right guy, we will do something interesting together.
But there's no playbook, right? Some founders are so different in different ways, like whether it's aggression versus quiet, kind of slowly build. Whether it's product focus, consumer focus, personality type. Some are aggressive, some are not. And I want to kind of dig deeper on this because I think the best investors are able to identify a good founder within the first 10 minutes, whether that person is going to build something out. What is it that you look for?
Okay.
What is it that you see other
It's
than
not
passion?
good founders. It's a business and the chemistry works if there's a chemistry between the principal as an investor and the founder. So someone who gels with me might not gel with another investor. Doesn't mean that they won't build a great company. So my job is to find a founder that will have the chemistry with me, which excites me. I give him the energy to build something special. So if you think of DSG over the last 13 years, I now built a team. Fund one was me and an intern. So I did 21 deals, 21 term sheets, 21 SHAs, all on my own.
Are you serious?
Because again, 12 million. So I try to hire people. They say, Deepak, how big is your fund? I say 12 million. Management fee, 2%. You make 240,000 in fees a year. Yes. You pay rent. I said, yes. I want my salary to be 100,000. You don't even pay yourself 100,000. I said, yeah, I don't pay myself. So I couldn't hire anyone because the smartest IIT and IIM kid said his business model is DSG is not sustainable. Income per year is 240,000. He pays rent. He can't pay me.
But carry will come over some.
You tell a young kid. Again, DSGCP had no track record. We were very new. And I didn't take a salary for the first 5 years because there was no, my point of view is I'll hire a team that I could afford. Whatever's left over, I'll take. If I don't have left over, I won't take. You got to put skin in the game. And so
what are those 21 companies like? Which ones were like
you think the fun one was, again, luck, skill, right time, right place. So that fund one, we raised 12 million. I've given back 80 million in cash. So we had EazyDiner, we had Veeba, we had Oyo.
You invested in Oyo, is it?
We were the first investor in Oyo.
Oh, I did not know that.
So we were early in a lot of brands.
Okay.
That sort of became big. So it's sort of and that helped us build the reputation in the market. That helped us raise a $50 million second fund. That helped us sort of convince the smart kids from IIT and IIM and McKinsey and Bain that, they don't have to go and work for a branded US fund in India. They can come and work for a sort of I'm a startup.
Yeah.
Okay. So they were willing to take a bet on me. And as I hired my team, I wanted people who had the same ideology, but very different personalities, because not everyone will get along with a couple.
Yeah.
Okay. So, Indian founders are so diverse. How do I get two partners who have their own style and will attract different type of founders, where the chemistry between them will create magic? Because if you put me with a different sort of founder, I won't give him the energy, he won't give me the energy, and we don't know whether the business will work out well. The last thing you want is a board where the founder and the investor, it's okay to disagree, but where there's
Negative
conflict.
tension, yeah.
Okay, and I've been on many of those boards. After 100 investments, you're going to see everything.
Correct.
And we as investors sit down often outside without the founder saying, you and I have different styles. I think for this founder, let's not use the DHCP playbook. Use your playbook, because this founder is sort of more like you. And with other companies, I say, this guy, I think it's better if I manage him. Because the last thing a founder wants is, I will tell him grow slowly. Someone says, learn fast, break fast.
Yeah.
Okay, that's
totally conflicting advice.
Totally, and both are correct, depending on the playbook and depending on the balance sheet you have.
Correct.
Okay, there's no right or wrong. But the last thing you tell a founder is give him conflicting advice where he, after the board meeting, is like, what do I do?
Yeah.
He needs to have full trust that the board is behind him. And if the board aligns outside or even with him, it's clearer and better for him.
It's a good point. You're right. Sometimes, and in good times, everyone will align. When the company is doing well, everyone will align.
That's easy.
When it's tough times, that's when people start becoming self-preserving. Someone has a fund cycle to protect. Someone has, like early investment, so they want to kind of make sure that the exit happens. Someone have just come in, so I want growth to happen over a period of time. And so they will differ on capital allocation. They will differ on strategy in general. How do you manage that?
It's changing. I think if you look at now that the ecosystem is sort of 20 years in, I think the analysis you should do is which funds have co-invested, which other funds on a more regular basis. Because over time, if you look at DSGCP, we co-invest with certain funds much more than any other funds, primarily because our ethos, our style, our outlook are very similar. So for
and if you were to articulate that, what would that be? What is your ethos as an investor?
Ours is brands take a decade to become relevant. There is no need to rush scaling. I'm happy to grow at a very comfortable pace. I'm happy to be on your cap table for 8 to 10 years. So why would you want to go and build hyper quick? So that's my style, which is very different from some of the other funds. And we often sit down with the founders saying, what are you by nature? Now, if you are a whirlwind, you want to break fast, learn fast, then I don't think I'm the investor for you, because I'm going to annoy you to death, because I'll ask you to slow down. But if you're a slow builder, you don't want the other funds, because they will say, grow 100% year on year.
Yeah.
So again, we spend a lot of time with founders saying, know yourself, understand the type of business you want to build, and then we'll help you figure out whether we are the right investor for you. Because the last thing you want is to get into a bad relationship. Unlike a marriage where you can get divorced.
Yeah.
you know this business. Once I give cash, I can't get the cash back out.
Yeah.
There's no divorce here. You're there in a unhappy relationship for a very long time.
Correct. In fact, I noticed this that the other day I wrote on LinkedIn, as I do often, that there are companies like, and I looked at two sectors, and one of them is your sector, right? Where there is a OYO, which has gotten like billions of dollars of investment and like hyper growth, scaled it, visionary founder, marquee capital, crazy scale globally, right? But customer experience has been shaky and has like 2 steps forward, 1 step back throughout the, as opposed to that, a Bloom, where I'm hearing this amazing things on the affordable hospitality in Bloom, like from the product to quickness of check-in and check-out. It is just a fantastic experience, but slow and steady, almost bootstrap kind of building of that hotel. And of course, the scale is obviously, you compromise scale tremendously for the speed. And similarly, in mobility, instant mobility, you have Ola and Uber, again, billions of dollars invested to reach cities and thousands of.
And then you have Blue Smart.
And then you have Blue Smart. Slow and steady and kind of really focus on the product. They've still not launched Bombay. I keep asking Puneet and Anu, like, why aren't you getting in more? Not yet. Not yet. We need to get the product right. We need to get the experience right. So, and there's no right or wrong. I agree with you. There's no right or wrong because both create value in their own way. One kind of breaks as you go and creates markets where there were none, and the others are kind of very slow and methodical, but very purposeful about their actions. But you prefer the latter.
I prefer the latter. It's an area I'm more comfortable in, and I enjoy the journey of building. I love being with the founder and debating how much should. I mean, from the brand name to what the UI should look like. I enjoy it. It gives me energy.
Yeah.
So it's not about the investment. For me, it's all about the journey.
A founder nicely said it to me the other day that let your business marinate. Like,
Takes time.
Takes time.
Just let it marinate. You don't have to do anything. Put in the ingredients, and now you can't fast track this. You can't do what a 7-hour marination does to a piece of meat in 15 minutes. You can throw the world and all its capital at it. Marination is the best way for a business. So, but you told a story in the meeting room about how Deepak kind of, and this is the second mortgage my flat situation that
because he didn't get into it.
It seems to be a theme. But you talk about that.
No, but it was like, when we were at EazyDiner, so I'd just come out of Oberoi, really. I didn't know anything how to, the point was I came from a background where I did not know how to raise capital. I'm an operator. I still think I'm an operator. A lot of people think that, I don't know how much capital we raised or whatever. We haven't raised much, really. We built our companies frugally. We always, like you said, marinate. I always give the example that, you can't have an elephant baby in a day. So, if you're building an elephant, it's going to take time, So, so one thing was that, and so our point of view was that we'll build slowly over the long term. And I always think, I read a beautiful line recently, which said, think in quarters, but build for decades. Yeah. So, of course, because you got to pay your bills, but think in quarters and build for decades. So that's been a constant theme with us whenever we've been building. And we've kind of stayed very pure to what we're building. So at EazyDiner, I just come out and Goldman Sachs was there. And we had a great conversation, and Niladri was the India head, fantastic guy. I met him at an event, and then we kind of spoke, and he said, listen, I love the business, I love the energy, it was great. We negotiated the valuation.
They were going to invest.
It was still a small company, and they wanted to put in 25 million in 2 tranches, 15 and 10. Until that time, I think the maximum we had ever raised was, I think, maybe 6 million or something. So imagine you're raising 4x of what you've ever raised. And all done. And we went all the way to the chairman Asia Pacific, Mr. Murata. And he said, love it. Congratulations. Welcome to Goldman Sachs. We said, wow, done. So, and then 7-8 days later, the term sheet was supposed to come. I got a call from Niladri that there's been some internal shakeup in Goldman Sachs and 2 different divisions have been merged, which was true. He sent me the entire press release. And he doesn't know, even as a career Goldman person, he doesn't know the other side, which is based out of London. And the SSG, which was giving us a term sheet, was based out of Hong Kong. And as luck would have it, ours was the only deal which, if it was just 1 day earlier, it would have got done. So I think the last deal that happened was Purple and Rebel Foods. And we were just that one. So actually, we just came in a day late. Otherwise, it would have come through. So it didn't come through. To cut the long story short, we were left with 4 crores. We had no capital. We were losing 1.5 crores because we were scaling. So basically, I realized that this was October when the round failed. And they would meet again in March. Till March, if I had 1.5 crores burn without sacrificing growth rate, I'd need 9 crores.
Yeah.
I only had 4. So I said, okay, so what do we do? So I called
That's a
up.
scary situation as a
Yeah,
founder,
but
right?
and for me, it was even more scary because I'll tell you why. See, the background was that I was not coming out of an entrepreneurial circle. Yeah, I was coming out of a traditional hospitality circle.
Correct.
So a lot of guys at the hotel, at Oberoi or everywhere else said, just want to work with you, Kapil. I'm quitting my job. So they quit these absolutely amazing jobs
come
and they
work
came
with-
to work for me. Yeah. So imagine, and I used to come to work, and my office is totally at the end if you ever come to my office. Kind of cross over and I kind of sit out in the open type kind of a place. Yeah. So I would walk in and I'd think, how do I say to this person that, you know what, 6 years back, I know you believed in what I wanted to do, but you know what, it's not going to work out. I even did a mitigation plan because Postcard had just come in, was getting some phenomenal reviews. I think, was it launched? It had just been launched, but open to phenomenal reviews. And I said, these many people we can still take to Postcard, but these many people will have to go because we'll be out of money. And I personally, for many, many years in life, and I remember my mother telling me once that never lay off people. India is a social security experiment. She said it in her own words, कि बेटा कभी किसी की नौकरी मत ले लेना. ओके, बहुत बुरा लगता है लोगों को, और हिंदुस्तान में ना लोग रिकवर नहीं कर पाते. तो कुछ भी करना, बोलना ठीक करो, तो जितना चांस दे सकते हो जिंदगी में देना, पर किसी की नौकरी मत लेना. So that kind of state. That is why even when COVID happened, and both the sectors where I operate in are such totally superbly number one on COVID impacted list, we never laid off people, not even one. Whether we had the money or not, we can't. It's our DNA, very difficult. Even when there are performance issues, we'll give you like 20 chances. Buddy, please improve. Okay? We'll make your life miserable, hell, whatever, but we won't pull the trigger. That's the biggest joke in the company. Yeah. So everybody tells me, like, you can't fire me, like you won't be able to. Yeah, but you're the toughest guy to work with, but you won't fire. The guy himself will quit and go. Okay. But you won't fire the guy. Okay. So anyway, so we were down to 4 crores. I said, like, how do I tell people? So I called Deepak up and I said, Deepak, I need.
And he was an
10
investor
crores.
already with you.
Yeah, DSG was my first check.
First check.
And then the Series A also. He was through and through. He's investing in all rounds. So he says, listen, I need a special approval on this because there's nobody else leading. Yeah, and I've already done 2 rounds. So this will look like an internal thing. Will you do the same valuation as last round? I said, I'll do anything. Now, see, step 1, he could have asked me for a lower valuation.
Yeah.
He didn't. He said, listen, whatever it is, I'm not going to squeeze you because now you're in a bad situation. So that's always very good. The second part he said was, okay, how much do you need? I said, I need at least 10 crores. Next 6 months they'll meet. And Niladri feels that there's a great chance that it will go through because it's got some great reviews by everybody. So the new IC just needs to see. It's more of a formality in 6
It's a
months.
bridge.
So it's like
that time was a bridge.
So, but I told him I don't want a bridge. So he says, I'll do a proper round. You're okay with the proper round? I said, bridge, I don't know if I'll be able to pay. I don't want a sword hanging over my head. I said, okay, we'll do a proper round. Don't worry, but I need to convince everybody else. Leave it with me. I'll speak to all the investors on the board. It's not your problem. It's my problem. Okay. So it was 23rd December. I had paid November salaries, another 1.5 crores down. So I was down to 2.5 crores in December. I reduced my burn to 1 crore, but that means I could pay December salary. I could pay Jan salary. So I paid 5th December, November salary. Then I could pay Jan and Feb. That's the only 2 payrolls I could meet now. And then I had to do something drastic. And even at Postcard, I never took the big checks, like I said last time. If I would have taken the 100 million there, then at least I had the money to do something else. But anyway, so I called him on the 23rd of December. I remember dates always very well. So I called him on 23rd of December. I said, Deepak, the money hasn't come in. And so I think he was doing something. He says, Kapil, just don't worry. I'll sell my house if I have to. And I'll send you the 10 crores. It is done. The paperwork's just taking time. And you'll have the money before New Year's. Okay, the money came on 27 December. Okay.
Wow.
Now, look at the timeline of things and how EazyDiner is and why I hold him and his firm in such high regard. October 2019, Goldman Sachs round fails. December 2019, I get a lifeline for 10 crores. The Goldman Sachs IC never meets again because
COVID.
March 2020, when they were able to meet, was COVID. So the industry goes into a tailspin, and I think even if they would have met that time, they would have said, no, we can't do it because listen, hey, this is a highly impacted sector. So we would have been finished, gone. There would have been no EazyDiner, no bank offers, no what the world loves today. Everything would have been gone. So I think those 10 crores saved us till we finally moved into profitability through COVID. And that's what, imagine if we only raised 10 crores and we still burned. And even then in COVID, as a value of the company, and that's how I always say, when you're building something, even as an investment fund for what Deepak did and for what we do, kind of get the culture fabric right. And culture is tested in the toughest times. It's never tested when the times are great.
Correct.
So at COVID, we did a 75% pay cut in EazyDiner. We said, at least as long as there's food on the table,
they're okay.
You guys are okay. And that is why when the business started moving back, I think we have, even in an ESOP plan for a smaller company like ours, as a percentage relative to what we've raised and what people like me or anybody sold, the employees have always sold the most. So we always make sure that the employees get paid out first, always. So our salaries were anyway zero, but they kind of stayed zero for a very, very long time. But we were very clear. But those 10 crores saved EazyDiner. Otherwise, there was no EazyDiner. There's absolutely no chance. Even on Postcard, where everybody really wants to come in, even today, and we say, we just want to take our time. We are building for the long term, and everybody says we are also long term, and we say, no, you're not, okay, because this is a different game. We are building the world's #1 brand, and it's never been built. It takes time, so it'll really test your patience and whatever. And everybody that speaks to me say, okay, maybe only Deepak can do it, yeah. And I said, yeah, with him, it's a different game. Yeah, because he gave us a lifeline, and that company exists today, and now it's such a superstar company. What EazyDiner is today is partly because that's why it's very important to get the right investors on your table, and not only that, but in many cases, there's always been a great. And we are friends. We've been friends before for 8 years we never did business together. But I think I'd always take money from him. I'd always take money from him on a discount, and there are learnings along the way. So I've always been so like even in a joke he'll tell me He says, that guy was telling me he met you, but your price was too high. And I always said, with Kapil, the price is always too high. Okay. and so with him, and we chat about it. And he said, and he always used to tell me that time, Kapil, focus on the terms and never the valuation.
Oh, really?
Yeah, never the valuation, on the terms. The terms are more important. And I told Deepak, I said, no, the valuation is also important. But as I look back on that life, okay, I think terms are most important. I don't mind selling cheaper, as long as, the terms are clear. Because I'm like a 24 hours entrepreneur, so I don't need you to tell me what to do. Yeah, means, really means unless, there is a very nice, and I say this to a lot of people, yeah. There's a very nice series on, I think it's on Disney Hotstar or something called Special Ops. It's a KK Menon. In that thing, it's a beautiful dialogue in the last episode, last scene. He says, when they're judging him, and the guys who are judging him actually don't have the authority to judge what he is. And there's a beautiful dialogue which says that the less competent should not judge the more competent. Beautiful line, huh? So my point of view is I'll only listen to you if I believe your competence is higher than me.
Correct.
Yeah? And I always tell my teams also that if you are leaders, then only lecture your team if you are really highly competent. If you're not, then people are not going to respect you. They may just listen to you. So one role on leadership is always to become more competent. And I thought Deepak kind of embodied that for me as an investor, always there, listening in, doing it. At one point, even I was doubting EazyDiner. Boss, is this okay? Because everybody I met told me delivery is fine. And I said, no, food delivery never work. Yeah. 400 AOV, you can just juggle up numbers to do it. Means I still say it. I still don't know how it can ever make money. Maybe it can. I don't know. I have no idea.
Public companies.
Yeah, they're two public companies, but I don't think they still make money on food delivery. Okay, I still don't think they do. Okay, however they are, and they're great companies, great founders too. But my point of view was that it'll never be a profitable standalone business. And I think even today when I look at the numbers, that's the only number I look at. So from my point of view, that was always there. And sometimes when I adopted EazyDiner, I thought he was always saying, no, it's the right path. It's okay. It takes time. It just takes time to build. It takes time to scale. It takes time to do whatever it is. And I think that's extremely important. So one advice to all entrepreneurs is select the investor very carefully. But sometimes you'll be in a position where nobody's giving you money, so you have to take the money anyway.
Beggars can't be choosers. I agree. But I want to come to the point on terms. Investment ecosystem is also much larger. Sources of capital are much higher, right?
Correct.
In fact, yesterday I was talking to Nikhil Vora. I'm sure you know him. First of all, when he asks me some question, I always think he was ragging because he's testing whether I know. That's the relationship I have with him. It's like
is he an investor on your?
Yeah, he's the second largest position in our company after the promoter. So Nikhil, like, what's going on? And I'm let me ask you this question. Like, what's going on? Like, people would raise angel money from HNIs and their bosses and so on. Then they'll go to a seed or a pre-series A fund like a DSG or early investors like Fireside or Sixth Sense or whatever. Then they'll go to a Series A, Series B, Sequoia, Axel, Then they'll go to Warburg, General Atlantic, and then they'll go public if they need more money and so on. And that's the path. What's happening to these almost public companies going back to HNIs? So he was like Zepto का कुछ आया, फिर बीच में कुछ और deal आ रही थी. So bankers are kind of, I know this is a slight tangent from the discussion. I'll come back to the terms,
Okay.
but what's happening here?
In what sense? On the why
Well, like if you're raising 300 million,
Yeah.
why are you going to 100 people who are going to put 20 crores, 25 crores each?
It's a pet peeve of mine. I think if you look at India today, as opposed to India 20 years ago, there's a lot of capital in India. Domestic capital is very large, very liquid. Without peeling the onion, and I want to do more work on it, on trying to understand why Indian families and HNIs and family offices are so aggressive on putting money into private companies. Because they are very liquid. Huh? It's very risky.
Yeah.
And we are in version 1.0 in India of family offices and HNIs investing in private companies.
Correct.
In Europe and the US, it's played out. And it's been a rocky road.
Yeah.
As you look at it today, 50 years into the experiment, those who have the stomach and the liquidity and the balance sheet have stayed in. And many have said, what's the point?
Yeah.
I think India will go through its own journey.
Yeah.
There's been a lot of hype that venture and private equity returns outweigh public markets, but Indian public markets have been on a
much better
wicket with full liquidity. And we are in a time where, early stage founders often think in a way articulated by Kapil. We need the right partner. It's going to be up and down journeys. We want someone who's going to be in good and bad. Terms are important. But if you look at the other end of the spectrum, companies who are now raising 200, 300, 400, they've said, we've been through the journey. We are the market leader.
Yeah.
So the only thing that counts now is valuation.
Correct.
And for whatever reason, the families are, when an institution who's writing 200 million does a lot of diligence versus 20 guys writing $3 million each, it's very different. So there is a pocket of investors who are willing to bet on fast-growing companies pre-IPO. And I think that's where we are at now today. That's why you have a lot of HNIs coming into pre-IPO companies.
Correct.
I haven't been involved in them, so I don't know if it's because the institutions are uncomfortable paying up the price.
Yeah.
But I'm sure there's some element of that. So it's going to be interesting to see how it plays out. If the IPOs happen and the pricing works, everyone's happy.
Yeah.
But India is expensive.
Yeah.
And look at the geopolitics. Trump is coming back.
Look at the
bond yields. Look at the bond yields.
Yeah.
The markets are, the markets are at a point where the risk is not priced in.
Yeah. Even like this week we are seeing, and last 2 weeks has been very tricky.
No, I agree. But I think the risk is more, over the next 18 months, the risk is much more on the downside. So again, India's got, if you have a 20-year view, it doesn't matter.
Yeah.
But if you come in at what looks like the peak, and your companies manage to go public, and your companies go public at a 30% discount to what you paid.
Yeah, you're in the loss. Yeah.
You're in a loss, which is fine. If you know you're playing the game, but if you're new to the game and expect to make a flip in the first 12 months, you'll be in for a shock. So let's see what happens. But there's no shortcut. You need to go through the journey. Indian investors will need to get comfortable with the risk profile of private capital and the fact that you're locked in. So that's where we are at in the macro sense of the journey. That's my point of view.
I experienced it personally. Last round, we went into the market looking to raise 80 crores.
Okay.
We told our bankers, 03, ki 80 crore ka hai. They're like, it's 2021, we'll get more demand. Company is doing well. So we got term sheets of 450 crores.
Okay.
So one of them was a 200 crore term sheet from one fund, and it was like a late stage private equity one. This is Affirma Capital from Standard Chartered. And we told them we can't. It also came very late. So we said it's come very late in this thing. So we have already structured and said yes to the others. So we said no to that. And of the 250 crores left, we were not able to say no because there was a hedge fund, there were 2 family offices, there was Gulf Islamic.
Why could you not say no?
We had spent enough time with them. They'd done the diligence. We kept increasing. And we said, okay, there's enough secondary that can happen. Some liquidation. So we didn't want to say no because we had a relationship with all of them. And we but one of those was a family office, which for whom it was the first deal.
Okay.
They had made a lot of money in public markets. They were fantastic public market investors, and they put a laugh between the two of them, 40 crores. Okay, and this is like an individual family. I'm like 40 crore डाल रहे एक company में. I'm not. Like now, it feels like a lot. Like if a fund is putting in it, it feels like okay, fine. There's a team that is putting this in. But this is people who just their own money, right, off the savings account. And a year and a half later, he calls me like, यार, can I exit? I said, अभी तो कुछ हुआ ही नहीं है. अभी तो ना value increase होगा. और मैं कहाँ से लाऊँ आपके लिए? Where do I give you return? मैं बोले ऐसे value goes up. I have to find a buyer for you. He's like, अच्छा ऐसा होता है क्या? I was like, हाँ, dude. Yeah. Private company, I can't just create. He's like, company can't buy back. I said, no. Loss-making company, don't buy back. Even if we are profitable, we can't do buybacks off the bat.
Correct.
You will have to wait for the right time. At the right time, I will give you great returns. But and that's when I realized that there is just an expectation misalignment.
Yeah, there's a phenomenally, I think, I don't, okay, so, you picked up a right point. So I wrote some angel checks because I like food and beverage. So I only try and do it there because I understand, I enjoy the space, yeah. So the best cheese, who does the best cheese, who does the best wine, so those kind of guys, yeah. So just F&B, khao piyo, khush raho. So that kind of checks, okay. And I had a couple of investors who were writing angel checks here and there. And then they were berating the founders and whatever. So I said, guys, let me tell you what an angel check is. Why is it called angel check? Angels are not supposed to berate founders. Okay, angels are supposed to say, listen, I'm your guardian angel.
Yeah.
Call me when you want. Yeah. I'm always there to protect you. I'm always there to guide you.
Correct.
Otherwise, if you do not have that maturity and you're going to keep on calling the guy and saying, this is how you should run the company, don't write the check.
Yeah.
Yeah. And I think a lot of that has happened here. A lot of them have done it to get quick returns, like Deepak and you said. And I don't think a lot of private family offices even understand this.
Yeah.
And I honestly, in India, if you want to operate, think about it, that every single Postcard hotel is actually a small fund, no?
Yeah.
Because a family owns a hotel.
Yeah.
Yeah. Or invest money. And that fund could be anything from 30 crores to build a very small hotel to 400 crores to build a very big hotel. Yeah. So you're putting in money, you're locked in for 20 years. It's actually a fund. So when I sign a Postcard hotel, now, for example, I have 32 now. There are 32 funds I'm running. Yeah, 32. The 11 open, and then another 21 under construction.
Wow.
Okay, so it's an amazing scale, but it's actually 32 funds. Huh? I'm running fund 1, fund 2, fund 3, fund 32. Yeah, think about that. Yeah, and every fund size is a minimum of 30 crores to 400 crores. Now, maybe one big one is maybe even 700 crores. Yeah, that's a 140-acre development. So this is what I'm running. Yeah, so now I am now speaking to all my fund managers and saying, okay, what are you guys doing and whatever, whichever way. And then I have to generate returns and all. So one of the things that we do is we try and say, how do we keep it friction free? That you and I, actually, it works so seamlessly, so beautifully that you and I don't need to speak. That we just speak, okay?
This is the asset owner.
This is the asset owner and the Postcard hotel. Should not keep on engaging in dialogue.
So you have an asset owner, you have a holding company which owns the brand, and then you have an operating team that creates
operating team creates the brand and all. I don't have a holding company. So the operating company goes and ties up with Shantanu, who has this 10 acres in, let's say, Himachal, overlooking the mountains. Okay. And Shantanu's put in 100 crores. So now Shantanu says it's a Postcard hotel for 20 years. I built it like you told me. I built as many rooms as you told me. So we have to be very proper. We have to do our diligence like a fund does their diligence. Saying this destination is not
franchise.
So I'll give you an example. So and that is where it's so important. So look at Panna, for example. Beautiful place. Yeah. Postcard can't come into Panna. And I have 5 offers right now to open a hotel in Panna. Everybody will sign. And my point is not ready for a Postcard hotel. Does not have the traffic density to take a Postcard hotel. Does not have the rate propensity to take a Postcard hotel. As of now, according to my feasibility, maybe some other chain's feasibility says, no, it has. It's great. Postcard's an expensive brand. It's an experiential brand. I need to take my guests there. Will my guests go there? Many concerns. But we did the first hotel in Northeast. Yeah, means nobody's done a luxury hotel in Northeast. Yeah. And look at the amount of companies who made money from the Northeast but did not do a great hotel. Means I don't want to take names here, but again, so none of them have done it. We're the first guys who've done and opened up a super luxury hotel in the Northeast. And now, after we opened the hotel, New York Times says in the top 52 places to visit in the world, Assam is number 4. Fantastic, yeah. So we're kind of doing that spade work. But Assam, month 1 in December, the hotel's profitable.
Are you serious?
And every time I would go to Assam, I would stay at a hotel because when I would go to inspect my hotel, I used to take my own pillows. I used to take my own bed sheets because I'm not sure they were washed where I was staying. So I was like, I'm not really sure. I don't want to fall sick. Let me take my own pillows and bed sheets. And out there, you go and open a super luxury hotel. So a lot of diligence that you do, but you run that. But the point that I'm trying to come and say is we've got to build in mechanisms where your interaction level is low. And that means in some meetings, like 1, 2, 3, I can remember 3 offhand, where everything's been okay. Site's great, hotel's great. And I've just told my development team, like, guys, this is great, but what? We are building for decades. And I just don't want to be in a relationship with this guy for decades. Like Deepak's very difficult to divorce. 20 years. That's an average Postcard hotel tenure. Yeah. Because I was speaking to Shailendra Singh at Peak 15, and he said something very beautiful. He said, Kapil, you're actually a fund.
Yeah.
You're actually a fund. He said, we have commitments for 10 years, 20 years. You have commitments for 10, 20 years.
Correct.
Postcard is actually a fund. It's not a company. It's a fund. I said, man, thanks. That makes me look pretty good. Huh?
Yeah.
We couldn't get any money into EazyDiner from funds. And now here we are running for the biggest funds in India. I said, that's great. But again, I think that's the real key. And I am not sure if family offices actually have the maturity, like you rightly said, and I would expect this is going to happen a lot because they would expect in India. Also, the other problem in India is, one, we have a very strong opinion on everything. Yeah. And the second thing is what we do is we are very demanding.
Yeah.
We believe the world belongs to us. This is a
if
problem.
If you're giving the money,
you think, wait, hamari company hai, kaise mana kar sakte hain? So one of the things that we did at Postcard to avoid this was we said, we don't want to do management contracts. You build the hotel, give it to us, we'll do a revenue share lease. Now I get Marco Pierre White to come and cook at this hotel. That's my problem, not yours. So don't tell me, but why have you got such an expensive chef? Okay, why are you sourcing only organic food?
Yeah.
Why don't you, organic atta kaun use karta hai? Okay, but again, so that's the point. So we kind of, at every single point, try to work out a way where friction is lesser and lesser. And I somehow think with family offices in India, and I know they're maturing too, and some of them are really matured, I still think there's a very, very great space. I see it in so many angel companies. I see it in so many young founders now getting bulldozed by private offices. And that's why institutional capital is institutional capital.
Veeba is a good example, right? There's been no new investor for a long time because Viraj has said, so we did a secondary exactly 12 months ago. And
you sold or you?
I had to sell because Fund 1
was closing.
Was 12 years. And Viraj didn't have to spend time, but he helped. He said, Deepak, you help me. I need to now give you an exit. We ran a process and we got 7 bids. Again, Veeba by that point was very profitable. And when all the bids came in, he said, Deepak, don't take the highest bidder. It was my shares. He says, take the second highest bidder. And the second highest bidder was World Invest. He says, I'd rather have the same guys on my cap table, not change my... He says, whatever the board has done in the last 12 years has worked. The chemistry is magic. I am worried, despite this other new investor being of the highest pedigree, who I respect, I don't know what the board's going to be like. We've had this magical board for 10 years. Why are you going to change it? So I said, fine. I'll take a slightly lower valuation because you want to keep the...
Board
for
intact.
him, the board chemistry was working.
It's very important too for a founder.
Talking about family offices, I think you're right in the sense that, for example, we have Patni family office. Arihant is involved, but Gautam is like the professional CIO. Premji has done a fantastic job backing companies. So I think as wealth accumulates and as appetite for this asset class goes up, they will get better.
Yeah. If it's institutional, the moment family offices become institutional, I think it'll get better. That's my take. But in the infancy of a lot of capital now coming in, I'm not sure on the quality of capital. So Premji Invest for me is as good as any fund, for example, or the Patni family office that you're talking about. So if it's institutional, I think it's great. I think Sunil Manjal runs a very good institutional office, for example. If the family office is institutional, run by a professional, I think it's absolutely great. But in a lot of cases, I think you just need to be a bit careful there. That's what I think.
It's a journey. I mean, when I started venture 24 years ago, my first deal, I thought I knew what I was doing, but clearly if I look back, I was a fool. It takes time. You got to learn by making the mistakes. I think I have a different vantage. So, I've been doing this for 20 years. Let's only focus on DSGCP. We've raised 4 funds.
How much have you raised total till now?
300 million.
Wow.
We have raised no India money in our history till last year. Ever. And of the 300 million, 75% are family offices, single family offices. So these are family offices, each of whom are worth 1 billion or more. So these are family offices who have been in the family office structure have been doing it for 25 years or more.
But mostly public markets.
That's
Everything. So family offices who are that large, you have to do public, you have to do real estate. They are large, right? So just to give you a sense, my biggest family office is worth publicly more than 80 billion. Okay, so it's big, very large. They have a 25-man team, 6 offices. The one that everyone knows in India because they're very visible is Whirlinvest. It's a single family office. It's the Belgian family who started AB InBev, the world's biggest beer company. You can just Google it. It's a public company. They give hundreds of millions in dividends every year, and each family office gets it. Needs to be deployed.
Correct.
And if you look at Whirlinvest today, there are family members on the board and on the IC. There's not one family member in Whirlinvest. They're professionals in 6 offices, not one family member. It's totally institutionalized.
That's the game. If you institutionalize it.
But it 25-year journey. I think India will do the same job and they will learn. So I have no doubt that the Indian family offices will get there. But you can't leapfrog it. Premji has been at it for 20 years. They are very good. Some have only started last year. So you can't expect the guy who's doing his first deal to be good as a Premji or a Patni. So again, I have full confidence that they will get there. It's just that as an investor, when you take money from a family office, find out where they are on the journey and help them get educated and say, guys, if you give me money, best case, you get money back in 7 years. If things go choppy like they always do, I hope you're going to be with me because I'll be calling you for help. Don't call me and say, I need my cash back because even if I try, it's going to be hard to get done. So again, help them get it done, help them be educated because we need those family offices to build the depth of the ecosystem in India.
The problem in India, Deepak, is also something else. India is a highly speculative market. We guys pick up on speculation more than any other country.
हो भी तो रहा है ना?
हो भी रहा है. The problem is
market before IPO
speculation.
is very
speculative market.
I think speculation and gambling is not India's domain. The Chinese are
we
the same.
lead it.
Because you're on the ground. Living in Singapore, looking at the global world, people like to gamble. Okay, the Chinese investor is as speculative. In the US, they speculate maybe more on sports gambling, which you don't. Humans by nature are gamblers. So we got to take that into account. I get worried about those guys. Family officers who have 500 crores, 1,000 crores, they will be who's not going to be, if a banker comes and tells you or your wealth manager says, you're a family office, put in 50 crores, you'll make 150 crores in 2 years.
Wrong selling.
Okay, my point, that's the issue, right? The issue is, I think, not everyone.
So we took money from an ESOP trust right now and to all credit, institutionalized family office. You worked with you before. And they wired the money because we told them, listen, the valuation's closing. They wired the money in 4 days. Now, no VC could have ever done that. They wired the money in 4 days. We distributed, and the paperwork was still happening. So that's a great part. But I think the level of diligence, Deepak, and for everybody here who's taking money from family offices is, like you rightly said, look at where that office is in journey. Otherwise, the last thing you want is an early stage entrepreneur who's taken 25 lakhs, 50 lakhs, 1 crore, 5 crores from a family office who's not in the right journey that could actually derail your entire company.
True.
That's a very, very big danger there. So you deal with multi-billion-dollar family offices, but they're actually bigger than funds.
But I'm also now,
most of the funds.
We raised our first India AIF fund last year. My first ever India deal was Sula. I was living in London. I have no real Indian nexus other than being ethnically Indian. I told Rajiv, I'm going to invest 12 crores, but I don't have the money. Give me 3 months. I then go and pitch the idea to investors who know me and trust me. And they look at me, bro, India doesn't make wine. Indians don't drink wine. You want us to back you to invest in a company that's starting an Indian winery. What is wrong with you? Okay? But if they didn't take a bet on me then, I wouldn't have started my journey of being a VC on my own. So again, I told them, I know it's the first thing. I worked on first principles. This is why I think it's going to work. It's not a no-brainer. These are the risks. There's climate risk, this risk, brand risk. But I said, Indians, like everywhere else, are aspirational. Technology has changed. The Netflixes, the Spotify's, the OT, everyone's in the world is watching the same thing.
Yeah.
They're all aspirational. People in New York and Paris and London are drinking champagne. Why can't they drink champagne here? Given the import duties, champagne's expensive.
Yeah.
India will make a sparkling as good as what you get in.
Already is.
It already is. But you need to have a leap of faith. Trust me, because I know Rajiv can do it. So I give the family officers the same credit. I know you've not done it. It'll be stomach churning along the way if markets. But I'm happy for you to come on board.
Yeah.
But don't do kitsch along the way.
Yeah.
But because you will have.
I'll give you a real example, Deepak, and I'll give you a real example of your portfolio company. You have a company called Bombay Banta.
I have
correct?
a Bombay Mata.
Yeah, doing very, very well. Great
like that
brands and
company.
whatever. Yeah, fantastic. I'm an angel investor from the starting in that company. So one day the founders called me and they said, DSG's offered this valuation, but there is this guy in Punjabi Bagh, yeah, who's a trading guy, okay, and he comes to them and saying, "Kitna diya hai unhone?" So he said, "We tell him the deal कि sir इतना दिया है." He's saying, "Okay, आप उनको इतना परसेंटेज दे रहे हो, 5% मैं कम देता हूँ और 50 लाख ज्यादा देता हूँ, okay, फैमिली ऑफिस ही है ना, फैमिली ऑफिस ही है वो भी,
Correct.
okay, saying मैंने 20 इन्वेस्टमेंट और कर रखी है, and some good ones too, okay, without taking names of those investments because we're not involved in the other ones, but good ones, not bad, huh? Matlab, guy's been around, huh? So, and he says this, okay, so these guys call me saying, sir, एक तो घर के पास ही है, okay,
So proximity.
हाँ proximity भी है, मतलब जानते हैं, nice guy सर, और बोल रहे हैं कि अभी दे देगा, ये DSG से हम 3 महीने से लगे हुए हैं, diligence ही चल रही है सर, okay, वो बात ही कर रहे हैं, सब कुछ कर रहे हैं, तो sir, what is your advice? Not that we want to go, but do you think it's a great thing? I said, stop taking that guy's calls, man. I said, because he'll be at your house in 6 months, because वो पास है ना, वो घर आ जाएगा, okay, and that's what happens. And then what happened was at one point, and this is where, because this show is watched by so many entrepreneurs, it's so important for them to know that quality of capital is extremely
Very
important. Very important, yeah. And I told them, I said, let's look at Bombay Banta for 1 second. And, Bombay Banta became famous because it started doing those drinks on Vistara. Okay. And they kind of, it goes the other way around. You crack an airline after you're like 5 years in the journey. They cracked an airline day one because the quality of the drink was so amazing.
Paperboat type also. Like
Paperboat
Indigo,
really. Like people go crack Indigo and
Indigo,
made whatever it stands for today. And so Bombay Banta did that. And I told them, I said, but think about it. DSG's offered you this valuation. What if Vistara guy doesn't wake up tomorrow morning? And the new guy who comes in and says, you know what? I don't want you guys in. So you're pretty much gone, because till that time, there were actually one company and 3-4 more companies. I said, you know what? I know DSG won't withdraw the term sheet. But this guy next door or anybody else will withdraw the term sheet. So one important lesson that I can only teach you as an angel is always look at the quality of capital. And I really think it's extremely important, because I am now seeing a lot of young entrepreneurs with great ideas are picking up capital from people who think they can make a very fast buck, but are not going to be able to take a fast buck, because it takes, like I always say, well, I said it earlier on the show, think in quarters but plan for decades.
You need to be built different to say things like, I will mortgage my home and give you the money.
Yeah.
But don't worry, it's not easy for most capital allocators.
I say this in jest. At that point, it was just before Christmas. He was panicky. I wasn't going to mortgage my home because I had reserves in the fund. But he's like, I told him it's my problem, right? You run the business.
Yeah.
I will take care of the balance sheet.
No, but it's not about mortgaging home. It is about a deal falling through, 2 months of runway left, and still putting in a large amount in a company. Most people won't have the gumption to do that.
Span out, right? I've been on the board for 5.5 years. It's not like I wasn't on the board. I was there from inception. Come up with a name, seen their journeys up and down. I was convinced it was a good business. The fact that Goldman's was coming in, fantastic.
Great, yeah.
When Goldman's could not come in, it wasn't a function of the business quality. And because Goldman said they were coming in, we didn't have a plan B. So he called me, and this is not the first time we needed a plan B. Other companies have been through the same thing. And I said, no problem. You need 10 crores. I said, Christmas and New Year's Eve. I just chill. I will figure it out. I called some of my LPs. I put personally and my fund, we wired the money. Yeah. If it was not a good business, I wouldn't have done it. But again, he needed comfort that what if Goldman's is Goldman's, right? Goldman's never falls through. It fell through. He's like, what if you fall through? I said, worst comes to us, I'll personally mortgage my house.
Yeah.
That was the context, right? I think founders need to understand that investors have your back.
Yeah.
That's all they need. Okay. And I cannot have every portfolio company's back. I tell my founders, we are a venture fund. We come in very early. For every 25 bets, 10 will die.
Yeah.
So my job is to 25 shots on goal per fund. I'll watch you over 3 years. Some will die on its own. And of the 15, in honesty, only 5, 6, 7, 8 will really make it. The hard job is the 10 who die naturally, easy. Of the 15 who are left, as a capital allocator, from my reserves, who do I give most to?
Yeah.
That's really hard. That's where
Choosing between children almost.
very hard. Very, very hard. And that's where I've made most mistakes. Some of my funds aren't performing as well because we placed the wrong bet at the wrong time. I think we've become better at it.
And what are the reasons for that mistake? Was it like
When you're doing as early as we are coming in, I think the lessons, our hypothesis 20 years ago was by year 3 or 4, you know who the winners are. I've now realized even in year 6 or 7, you may not know.
You don't know.
Oh, really?
Some companies just take long to blossom. Some are too early to market. No one cared about a particular category. No one believed in a particular space. So you need to be have a longer duration. Now, instead of putting more money in 5, I might put money in 10. You need to be capital efficient. You need to show me that there's some growth. You need to show me product market fit is done. But now I'm more willing to spread the capital more broadly and wait longer to follow on.
That's a good point.
Okay, so again,
that's a good point.
It's a learning from early stage consumer brands. It doesn't apply to tech necessarily.
Yeah.
But in consumer brands, you've been on your journey.
Yeah.
But look at Veeba, which is a big brand. Only year 6 or 7 when I invested in Veeba in 2012. No one had heard of it till 2019, 2018. Is when it took off.
Yeah.
So the first 5 or 6 years, he was building a great business in the shadows, no public profile. He was just
At it.
at it. So you, as a board member, you see it, but externally you don't see it. So again, and every company just has a different cadence.
Yeah.
So we just said, let's avoid the mistakes we've made of taking, in year 3, we got to double down. Just be careful, just be much more thoughtful of who we back and pace it appropriately and not use the same pace for each company.
Yeah. I in fact think in consumer, the power law doesn't work. I don't think it will be that there'll be 2 fund returners. There probably might be 5 to 6 that do well and 10 that will kind of give you a 15% IRR. Something
Maybe. Again, our hypothesis is the same as yours. But again, no, Veeba has performed like crazy. Sula has performed like crazy. So far, the real data has said you will have one outlier.
One outlier, yeah.
Or 2 outliers so far. But the hypothesis going in will be there will not be a power law, but so far there is. So I'm still at it.
Yeah.
We are still building a business assuming there's no power law because I think that's the right way to build consumer brands. But let's see. The good thing about our business is it's black and white. 10 years from now, I'll show you my performance by company and we can take a call on whether there's a power law or not.
Tell me, because I think in consumer mortality rate is a lot lower. I don't think you'll write off so many investments. I think you will find a buyer, some company will get, there will be...
Let me ask you this. You've been in consumer when you started the business, consumer startups weren't that sexy. 2025, everyone wants to start a consumer startup. Everyone wants to be on Shark Tank. The number of...
what is a Shark Tank? It's quite crazy.
The number of consumer startups today, it's like...
Unreal.
And the number of...
It's very intuitive, right, to build it.
Yeah, and now there are role models. There are people like... Look at what Rajiv Samant has done.
Yeah.
Look at what Manish Purple has done.
Yeah.
Look at what Mama Earth has done. So people now believe you don't have to be a tech entrepreneur to be a millionaire.
Correct.
Or a multi-millionaire. So now they are building any business where there's a passion for, which is great. Which means there's going to be a lot more consumer businesses. By definition, you're going to have much more mortality.
But again, India is aspirational. And as India is aspirational, as people's purchasing power goes, people get more discerning. Like you said, your kids don't use the same brands as you do.
Which annoys me.
If you build a great product, brand, story, authenticity, you will always have a higher chance of survival.
You will survive.
Yeah.
I agree.
You have to be very true to building the
Correct.
brand.
You will survive.
And that I think is also, a thing that we keep on speaking about all the time. It's about artists and commerce coming together.
Yeah.
Yeah. So great consumer brands are actually art. Okay, great consumer brands are actually art, but you need to get the commerce right.
Correct. And you have to get that entrepreneur who's doing it because he loves it. My worry is a guy's in there for the capital. He builds a brand to 50 or 100 crores, means he won't die.
Yeah.
But he gets bored. And I see 4 or 5 of these entrepreneurs, because they call me, Deepak, we've got to 100 crores. Will your XYZ company buy us out? I said,
Are you
why?
serious?
Yeah. Like, we came in, we thought we'll make money in 7 years. It's been 10. We had 100 crores. I said, dude, 100 crores is not bad.
Yeah.
He says, no. Not every founder is as passionate as you are or Kapil is in building because they love it. There are enough founders out there who either were never as passionate or may have been passionate. As they grow older, they get kids, they realize, you know what, not for them. So you're going to have a lot of these companies which are, I call orphan companies. They're not dead. They're breaking even. But the promoter just doesn't have it in him.
And then that's why investors also won't back. So now it's stuck.
Now it's stuck.
And even an acquirer doesn't come in because the acquirer, a buyer, especially in consumer, is buying for the ability to take this company 5x by giving a founder.
Amongst those categories of orphan companies, there might be some where the brand is really strong. The founder doesn't have the energy to take it from 100 to 200 to 500. They'll be acquired. But like he said, right, in consumer, the fragmentation is the norm. In each category, you'll have 100 brands.
Correct.
Before I came here, I was in Western Lok. I walked into Modern Bazaar. Every category has 50 brands.
Yeah, not really still. I still think, compare it to, you forget about the US, go to Vietnam. I went to Vietnam and I looked at the cheese categories because I'm an investor in a cheese company. So I looked at the cheese categories and there were so many. And in India, you have 2, 3, that's all.
But Vietnam
so just to give you an example, it's not that much of a cheese eating country also.
That's what I thought. I was in Vietnam 3 weeks ago. And I went to a pizza restaurant, one of the best pizzerias I've ever been to. It's called 4Ps.
Okay.
It's in India too.
It's opened in Bangalore recently. Imagine
cool,
it's now open in Tokyo and it's got long queues. It's a Japanese chef who's been in Vietnam for a long time. He opened one, became a hit. He's got 10 and Japan is very discerning. And I went to the manager, I said, and the pizza was amazing. He said, all the mozzarella is made on site every day. Every mozzarella. I said, why does Vietnam have the culture? He said, we were French. Our cheese eating culture has been here for a long time. We know what cheese is. We were great cows. And the Vietnamese have been eating cheese, not the quality and style of cheese.
That's just a category. But everywhere I went to the supermarket, their bigger supermarket, every single category had. So I still think there's so much to build.
I agree.
But again, the point is, do founders have the passion to build?
Agreed.
And what really happens is when founders get so passionate about a product, they become artists. And artists don't think of distribution.
Yes.
So I got an email from this absolutely amazing lady who runs this absolutely amazing place in Chikmagalur. And it's stunning, beyond the words. And he says, after 23 years, because of some personal hardships and everything, I'm done. And I don't know you. I'm reaching out cold, but I've watched you. If I want to give to this place to somebody, it could only be you. But I'm totally broken. Emotionally.
So what does she have in Chikmagalur?
Fantastic. Because I don't want to talk too much because I'll give away her identity. But an outstanding hotel that she runs. Like, oh my God, world class. Like really, I'm like, wow, man, this is amazing.
But she doesn't have the energy left.
She's been through whatever and all. So, but this is what I call artists. And today she wrote to me, she says, you wrote to me. I told her, don't give up. It's okay. Stay, hold, beautiful. It's great. It'll run, just hold, okay? I said, I don't want to come in like a shark and pick this up and it's your dream, man. You've been doing it for 23 years, just do it. Then today she wrote back to me, she says, I've got this absolutely amazing place on the river Kaveri and whatever. And last time I got hope, I'm going to run this, but should I take that? I said, no, don't do that. Just run this thing because you're an artist, you will fail there. So there's a difference between art and commerce.
This is a good point.
Okay,
Kapil
so you have to be careful.
You and I have debated this because there are 2 or 3 businesses we've met. We love the product.
But
we are obsessed with the product. But we took a call. This promoter or this founder will never run a big business or a business because he's so into the product.
Let's talk about that product. So we both look at a cheese. I think. So I'm a big cheese guy. Okay, that's right. Okay. So cheese.
I'm surprised he didn't bring the cheese here.
Outstanding. Okay, so everybody at Oberoi Hotels knew that if I would ever make it to the breakfast buffet, I'd just start losing it because what hotels serve is processed third-grade cheese. Most luxury hotels have the worst cheese possible. And if you're a global traveler, you would figure it out in seconds that it's third grade institutional cheese. Cheese is what? As a milk product, it can't expire in 1 year.
Correct.
Milk doesn't stay for 1 year. Yeah, milk stays for 1 day, 2 days. It has to be fresh and whatever. Nobody's doing fresh cheeses in India. So suddenly one of the chefs here at the Oberoi Gurgaon still remembers, a guy called Chef Manish, who now is the executive chef of the Oberoi Delhi, found these two guys in Bangalore making exceptional cheese. So he was getting a lot of hammering from me saying, you guys don't understand quality, you guys are not building global products, it's so poor, how can this be the best hotel brand and all that. So he got these two guys saying, this cheese is amazing. So they got me to taste it. I said, this is absolutely amazing. These guys are world class. So I met these two guys and says, how do you guys do it? He said, we guys decided to brew beer. Okay, so we watch YouTube videos to brew beer, and then we realized this brewing and all exercise and all is going to happen. Then suddenly a YouTube video opened on making cheese. So they learned it from YouTube, but they are practitioners of the craft. Okay, artists, two guys in Bombay. The ye bhi nahi koi remote place which is more sexier, no, Mumbai. Okay, in Mumbai they're making this cheese. Okay, and world class. So I kind of told all about it. Everybody's got to move to this. This is world class, and ditch this imported shit cheese that you keep on getting, which is filled with preservatives. That's why it bloody never expires because it's got so much chemical in it. So then, and I made Deepak taste it. Deepak said, man, it's unreal. It's like unreal. Really, it's unreal. Unreal. So
world-class cheese.
So what I did was, I went to Paris. I went to a beautiful supermarket in Paris. I bought 5 Bries, 5 Camembert. And I said, okay, now I'm going to do a blind tasting. So we did a blind tasting and we got 5 people who understand food and beverage in this country. Okay. And everybody picked out Spotted Cow. Imagine it beat the French cheeses in the versions that they were producing.
What is the brand called?
It's called Spotted Cow from Azuri. Okay, so he meets them. He says, can these guys do it? Even today, when I meet them, okay, I really have to don my angel hat quite a lot because I told them, I said, Pratik Shanagne, half the time I feel like jumping on you and really hating you guys. What are you guys doing? So when I quit Oberoi, I invested in the company. These guys do the best stuff, but they just don't understand business. They'll go to an executive chef. The guy will say, why is it so expensive? I don't understand this. And they'll say, but you yourself don't know cheese. You're an executive chef. Okay. You have no knowledge. Okay. And then they will build up the product and they'll walk out. Now, how do you do business like that? Okay. They said, these guys don't know how to. Sir, he didn't know, sir. I know you sent him. He doesn't know himself. I said, yeah. So, I don't know. They're purists at heart. Like Elon Musk is a purist at heart, by the way, but Elon Musk understands commerce too. Yeah, these guys don't. So then so Deepak and I spoke about it, and Deepak said, these guys are artists. And we were with Arjun Anand from Well Invest. We're on our table. He says, unreal cheese. Even he's tasted it. He's like, unreal. I'm saying, but those guys are artists. And artists don't understand commerce, yeah? So how do we fix it? So I was telling Deepak yesterday. I said, so we had this lovely lady who was running investment banking for JP Morgan in the UK, wanted to come back to India, Indian lady. So we got her in as a co-founder. We had another disagreement on that, but still.
Dude, how can you be co-founder after 7 years of the company's founding?
Okay. So we got her. So we said, because somebody needs to understand the commerce of this world-class brand making great cheese. Yeah. So we got her in, but that's the only way. But and on the other side, I keep on telling him, I said, Deepak, tell me, you run a consumer company, you understand food and beverage better than anybody else I know. In the last 5 years, tell me exceptional F&B brands, and he'll have to really think. Yeah, he'll have to really think. Exceptional F&B brands that you go in and say, oh my God, this is unreal. Yeah. So I think the bigger challenge, even in consumer brands in India, there are very few purists. And at one point I was thinking, how do you really help this purists? To say, okay, buddy, just go and do the absolutely amazing kind of work you do. Don't dilute that cheese and add preservatives. So everybody told him, shelf life is too low. There's no cold chain. These guys said, no, we can't put preservatives in our cheese. It has to be fresh. So the brie expires in 21 days. Okay, now these guys make a 200-gram thing. Now at our age, we can't have 200 grams of cheese. Okay, no matter how much we love it. So every time a brie mostly expires. So I'm telling them, either make the packaging short, and I say, you won't get the right, circle in the round. These guys are purists,
But it's fine.
But that is what it is.
But that's a debate we have. So I always tell them, go to Japan, spend time in Tokyo, anywhere, Osaka. Not every business or brand needs to be big.
Yeah. I completely agree with that.
Okay, what's this obsession with building a huge brand? If you are a purist and you're an artist, do it for the love. Yeah. Feed me, feed you, feed Kapil. Have a profitable small business.
And make money,
And make a lot of money. Yeah. And win every award in cheese making. Show them what great things India can do. This obsession where everyone has to be able to scale is wrong. So again, some people are born to be artists. Let them be artists. You know why? Indians right now are just getting rich. When they become rich, they're going to go to the same cheese guy, pay 5x.
Yeah.
Because they want him to be around and be relevant because they love the product.
Yeah. I think that's a good point.
Okay, they will survive. They will
But
more
you're
than
not
survive.
backing the purists. You're basically
As a
backing
VC,
preservative
as a
companies.
VC, I don't have a choice, right? I have a business. I need to exit in 10 years. So what I do
Yeah.
outside, and we have a very strict rule at DSGCP. No one in the firm can do any angel investment.
Why is that the case?
Conflict. So very clear. No angel investment in consumer brands. You can do anything else you want.
Why will it be a conflict? It's a good funnel way to create flow. If Hari likes some company, puts in 10 lakh rupees himself,
put it in the, if it's that good, the fund should do it.
But you won't do the cheese guy, no? If Hari says I'll do the cheese guy, we'll become big in 5 years.
No, we are again, conflict and perceived conflict are very different, but perception is more relevant than reality. If I go out to my investors and say there's any conflict that Hari was there before this, I'm a purist in that way.
I agree.
Okay, so,
I agree. That's a good point.
My team can invest in any consumer brand around the world. They can invest in any startup in India, which that's not a consumer thing.
Correct.
If it's that good that you want to put your own money in, it should be good enough for DSGCP.
Yeah.
And we can write small checks. We can write 50 lakhs. If it's that good, bring it to us, right?
That's great. It's great corporate governance. It has to be. Yeah, good.
I don't want any conflict. Okay, it's just simple.
Yeah. Talk a little bit, Deepak, in your experience, and maybe Kapil, you also should chime in. Creating good boards, and you spoke about corporate governance, you spoke about different investors with different interests at different times, all of which may or may not align to the company. And sometimes, I will actually make the company a separate entity from the founders. The company is its own entity. The founder is a shareholder. Multiple investors are shareholders. They all get together and they try to do what's best for the company. And in the process, they do what's best for them also. And I think in good times, everyone wins. In tough times, this alignment gets tested a lot. But what have you seen kind of stand the test of time in terms of good corporate governance and putting in a good board? So I have two questions here. One is good corporate governance, good board, and how do incentives align for the most part? And second is, I think we're seeing a lot of liquidity and a lot of appetite for private companies. And because of Shark Tank, for example, everyone wants to be an entrepreneur. And people chase money. People are becoming very wealthy in entrepreneurship or, through startups. But it also attracts its fair share of bad actors.
Yes.
And we are seeing over the last 3-4 years, especially post-COVID, we're seeing a lot of this froth out in terms of people kind of acting in bad faith. We've seen founders, we've seen investors, we've seen employees across the board. We struggle with it ourselves. Many times we feel like, trust by default is a good strategy to kind of keep good culture. But many times we feel, what if we get caught out in a situation where we have trusted someone in procurement, we have trusted someone in finance, and what if we don't have the right, I'm doing this for the first time. It's been 9 years, but I'm still not an expert on many things. And I trust my people to kind of be clean or do a stand-up, job on it. But how are you now coaching your founders on making sure that companies prevent those kind of risks also? So it's kind of a layered question. Corporate governance and board structures.
At the board or at the corporate level?
Both.
Let's start with the board, right?
Yes.
Again, I think the first thing we educate our promoter or the founder or the CEO is that a board's only responsibility is a company. Often the board will be at conflict with the shareholders or investors, because as a shareholder or investor, my job is to make money. As a board member, my job is to make the right decisions for the company, which may not be in the short-term interest of the shareholders.
Okay. That's like a quasi conflict is already there.
It's real there, and that's why we reinforce it before our investment, and we reinforce it regularly at the board meeting. I say, if you as a shareholder disagree with the board, it's fine. That's why there are reserve matters for shareholders. At the board meeting, I'll give you a real example. Life, one of my non-Indian companies, running out of cash. There are 2 term sheets that will ensure that the company lives. Terms are harsh, it's quite difficult. There's no other option. The board should say, we look at all the options, and to keep the company alive, we should take the term sheet. And then the shareholders can veto it because it's not good. If we take this option, the newer shareholder will be diluted. So he has a right because they negotiated with the founder in the previous round and they have a veto. I said, But the board cannot veto it because there's no other choice. If the shareholder decides to torpedo the round and let the company die, that's fine. So there's a difference.
That's an interesting point. You have to break that down a little easier for our viewers also.
Okay, so think about it, right? So a board's responsibility is a company, not.
And board is oftentimes a representation of the shareholders.
Often.
Yes.
In private companies, it always is.
Yeah.
The more mature the company, you have non-execs, third parties. But in 90% of venture-backed companies, almost all the shareholders are either promoter or
the investor.
Or the investor. Depending on how you negotiate the, 3-2, 4-3, often the promoter has. I always want to ensure the promoter has the majority.
Yeah.
But if it comes to a point in series D, E, or F, often the investor is the majority because the promoter is down to 30, 40%. Often in some decisions which are difficult, what's right for the company has a financial impact on the shareholder. So we always say there should be rights which are shareholder rights, and there should be because shareholders have the right to negotiate with the promoter. That's a commercial right.
Correct.
Board's responsibility under company law and in thought and equity is to the company.
Yeah.
You have all stakeholders are equal. You need to make sure that employees get paid, creditors get paid, and you're a going concern. If it means raising money at a dilutive round, the board has to approve it. Let the shareholders block it, but the board can't say. So that's very. So we instill that very much. Second point on how do you inculcate hygiene at a corporate level? How do you ensure that every employee can be trusted? I start with you trust everyone till they screw you. Other people start with don't trust anyone. I don't think you can build a great organization ever if you start with the latter. I'd rather be wrong and get screwed once in a while than to start with a position of I don't trust anyone. And it all comes down to the founder and the founding team and how they behave. Your team is like any child. Your team will act the way the founders and management. If you are a promoter who takes sides deals and the team sees it, you're screwed.
Yeah.
Okay. If you're a promoter who's totally transparent and the team sees it and you take tough decisions and you don't do any side deals, you pay everyone on time. Where you can't, you call them and say, I have a problem. The team will. It's amazing how quickly it aligns. So again, we spend a lot of time on team culture. Where we find great companies where the culture is a bit odd, we'll walk away. And we ask ourselves, can culture be changed? And then we realize the culture is the way it is because the promoter or the founding team is.
And it's very intrinsic, right?
It's intrinsic. You can't change it. And I'm not saying it's awful. I just can't deal with it. And there's some categories in India. If you're in real estate, if you're in...
Even alcohol.
Don't forget, I've been on the Sula board for a long time.
Yeah.
And it's something I struggled with, right? And then you got to work with a promoter who is very clear what he expects from his team.
Yeah.
And you make sure you put in the discipline. And that board, before it went public, it was all foreign investors of the highest degree of governance, right? They were very particular, very, very particular about, which meant you had to operate the business in a certain way. There's no choice.
Yeah. That's a good thing that happened with us also. We got Colgate Palmolive, which is like one of the most pristine, process-driven companies. The way the MIS is.
Correct.
The way accounting happens. They're very reputation conscious. So their CFO will kind of really be super particular. And that happened when we were like a 30 lakh a month business. And I'm glad they came in, and then Reckitt, of course, came in. Reckitt, and I could see that Reckitt is a little bit of a, be more risky, take more experiments, but Colgate is very conservative. So that way you could see it. But had that not happened, and I'll give you an example, right? And you're right, founders today are in their 20s when they start, straight out of college, or maybe 2-3 years after work. That's the usual profile. Their salary is maybe 70,000 rupees a month, 80,000 rupees a month, a lakh and a half. If they're really from blue chip colleges, etc. If you're at McKinsey or whatever, you're making a couple of lakhs a month. That's the extent. Most of them have come from kind of modest backgrounds, middle class families are even lower, right? And suddenly there is a $6 million Series A, and it comes in the paper and all that. I don't think people realize that a $6 million Series A is 5,000 lakhs hitting the bank account in one go. It's 5,000 lakhs. A person who's earning 2 lakhs a month, it's very hard to calibrate how much money that is. And suddenly there is, of course, deployment pressure because now the money is in, I have to grow the company, valuations grow, blah, blah, blah. But there's also a sense of, I haven't seen this kind of money before. Now, whether it's a management team or it's a founder, that maturity is not there. And I believe with doing stuff that is like kind of wrong, the gray area is a big one. It starts small. It starts with very small things. It could be, debt from the company. It could be a reimbursement that is a little extra. It could be mere friend ko ye contract, give my friend give my friend's agency the job. It starts with small things which you can justify, but quickly, if you're not careful and the board is not careful, it can quickly snowball into a situation which is you cross the line significantly. And I always wonder how because I don't think any founder starts a company with the intent ki I will do something wrong with the money I raise or with the finances of my business. I don't think anyone, whether it's Mr. Ramalinga Raju also from Satya, like I don't think even he had the intent. But sometimes you just like the slope is so slippery and the rewards are so high and the punishment consequences are almost zero that you just do it. And I've always wondered, like that's always
the consequences are never zero. That's the point, right? That's
my whole catch. Like आज बताओ मेरे को Bombay shaving company mein, if I decide to do this, no one will catch me, man.
No, but again, it's all.
But everybody will start doing it. That's the point.
100%.
That's
So if
the
you
point.
do
Once
it
you do it,
very
you have to do it.
I've been there. I've been involved in some companies where the CEO or founder will do it. If you do it, means the CFO knows he's approving it and he's writing the check. His personal holiday becomes private holiday, whatever. That culture will permeate down. Okay, if you're going to do it, expect everyone in the firm to do it. If you're okay to do it, good luck. So again, our job as investors is not only about giving money and helping the business grow. Is every first-time founder will go through this. Every single one. Whether he gets 1 million, 10 million, 100 million. And your job is, it's a big sum of money. You are the custodian of trust. Just whatever happens, good news, bad news, be transparent.
Yeah.
Okay. I think the majority, if they're coached well, again, you got to think of yourself as a parent. No parent wants their kid to go astray.
Yeah.
Don't steal. Even if you make a mistake,
Own up to it.
own up. We will figure it out. Punishment milega, but you learn. So that's all we can do with our founders.
Yeah.
And we spend a lot of time on this. We do. Doesn't mean they turn out right. Like not every kid turns out right. No parent is there to design to make his kid a crook.
Yeah.
So all you can do is instill, reinstill. And if they continue to behave badly, tell them I'm leaving the board and I'm selling my shares. And they haven't done anything illegal yet, but this is not the right culture. You just disengage,
At an investor level, that's the right thing. But at the company level, you've always...
You must have, like, I'm sure, overall must have been like huge.
Overall was huge. But again, also understand, India or maybe even the world is very different, I think Indian corporates have not led by example. Let me be clear.
That's
a lot of different Indian companies have led by example. I remember once speaking to Deep Kalra, and he says, Kapil, agar corporate governance na startup world mein kisi se seekhni hai, that's Sanjeev Bhikchandani. That's what Deep Kalra told me. Yeah. Okay. And I met Sanjeev 3-4 times. We have a lot of respect for each other, but we haven't really engaged that much. But that's what Deep Kalra said. And that for me is huge. Yeah. Because I think Deep is also very honest. So I think
the Rahul Yadav investment aside.
but corporate governance is a separate game. That is a different game. But that's what Deep said. In terms of running a company, of course, the investments could go anyway. So when you're running a company, I think 2-3 things. Align incentives correctly. I think the most intrinsic problem in a company is not aligning incentives correctly. Everybody goes wrong there.
Yeah.
So I'll give you an example. As president of Oberoi, I had 0 shares, like I shared last time. At EazyDiner, even my coffee boy has shares.
Correct.
So incentives for the success of the company are aligned correctly.
And distributed.
Whether you're coming at 6 a.m. or whether you're coming at midnight, the incentives are aligned correctly. The second thing is you need to do 4 years at EazyDiner to be even eligible for 1 share. Okay, so the vesting period is longer. Yeah. Because how can shareholders be short term?
For vesting or for...
No, you will keep on getting it, but you can't. If you quit after 3 years, you won't get anything.
Oh, really?
Nothing.
4-year cliff.
4-year cliff. Why? So everybody said 4-year cliff. I said, but listen, okay, less competent, don't lecture the more competent types kind of game. Do you do it for all employees? If you do it for all employees and you have a different cliff, then talk to me. You do it for 30 of your top guys. You're making them rich. Everybody else in your company is looking and saying, shit, this guy made 200 crores. I didn't even make 20 lakhs. Okay, and I did so much work. So then don't talk about it, boss. Our point is, there's a 4-year cliff because, please understand, what are shareholders? Where does it say the shareholders in a company have to have a short-term view of the business?
Yeah.
So my point is, if you have a long-term view of the business, buddy, then whether you make coffee or whether you're the CEO, you need to own shares in the company. Of course, the CEO has more shares than the coffee boy, but that's okay. That's fantastic. Everybody
That's
gets
4 year
shares.
cliff. That's crazy.
Yeah, but again, so nobody does it, whatever. But again, means look at it. Our attrition after 2 years at EazyDiner is 3%. And I am fighting two big multi-billion giants in the eating out space, correct? Now they are in eating out, yeah? My attrition over 2 years is 3%. So please, so again, somebody's coming to lecture me on this. So guys, please tell me if your company attrition is less than 3%. Okay, my employee NPS is one of the highest. Okay, our medical insurance plans are better than everybody. We cover parents on a medical insurance plan. And we even cover an intern who's joining EazyDiner for 30 days. You're interning with us for 30 days, your parents have medical coverage, you have medical coverage. I had a guy on a 16-day in Lucknow who had an accident with a truck and had a brain hemorrhage. Covered. So even the intern is covered. So my point is, it's not somebody wants to say a 1 year cliff, 2 year cliff. It's about how well you treat everybody in the organization. The DNA of EazyDiner is it is not for the top 30 guys. It is for everybody. That's our DNA. On that DNA, we said, okay, there's a 4 year cliff, guys. Okay, because you need to be long term. I'm not. You will work
And
for 2 years.
Does it
and
vest immediately after?
No,
4 years?
no. After 4 years, you can sell the entire thing if you want to
Okay,
sell.
so
And you can
cliff
go.
and a 4 year vesting period.
Yeah.
Oh, okay.
So it's like very clear.
It doesn't start at 4 years. It starts on day one.
It
but you
starts
don't
on
get
day one.
anything till year 4.
But you have to spend 4 years at the company.
Otherwise, you get nothing.
You get nothing. You absolutely get nothing.
That's crazy. So it's 100% vesting on year 4.
Yeah, year 4. Because now you've demonstrated.
You know that the standard.
You are in.
You're right. I can't argue with you.
Yeah,
I
so
actually
no,
can't
you
argue
can.
with
You can. No. But listen, my point is.
No, you're right.
I'll give you an example. When I opened the Oberoi in Delhi, okay, after a big renovation, everybody thought it was rightly their hotel because Oberoi Delhi's been a part. I dated here first. I came. I got married here. I had my first. My kids came here first. My kids got married here. We always come here for 30, 40 years. So, Mr. Oberoi did a big wall as you enter the Oberoi Delhi, and nobody liked that wall. And his idea was that resident guests should not meet non-residents, because residents have a private space. It's their cocoon. And the non-residents, because the restaurants are so popular, will keep on bumping in. So I'm not able to talk to the manager because, people are just walking me by. It's becoming like a corridor. And that was the design of the hotel. So we need to build this wall. So everybody I met, like 20 guys, said, I don't like the wall. I don't like the wall. So after that while I told them, I said, whose hotel is it, buddy? It's Mr. Oberoi's hotel. He's decided to put a wall. Okay, you have two choices. Either walk in or decide not to walk in. That's your choice. Okay, but it's his hotel. So all the people, it's our company. So what is the logic of a 30-day intern getting a full medical insurance cover in a startup company? Show me one example. The answer is we don't need to justify. This is our way. This is the way that we operate. So our point is after 2 years, we have a 3% attrition rate. So if your company has a 3% attrition rate, you make sure that everybody has medical insurance because India does not have social security.
Yeah.
People sell their houses, all the wealth that they have for this. That's it. So I think one of the key points, and coming back to that, is you align incentives for success and for making sure that honesty kind of becomes a natural behavior.
Yeah.
The second part I tell them is...
It's obligatory almost, you're right.
So second point, when I came from Oberoi and, there was an email in the internal part of EazyDiner, I forgot to take my salary hike last year. So which is only 2 lakhs, by the way. Yeah, not much really. And when I quit Oberoi, I was nearly making with all perquisites, including $1 million 7 years back. Okay. And everything kind of paid for nearly. Yeah. And I kind of moved that. Even my salary is not even that much between both the companies also. It's not even half of what it was. Yeah. But again, the first thing was that my team gets the salaries. When we sold stock, I didn't sell stock. It went into the ESOP trust. So everybody saw, and I called the team which reports directly into me to say, remember this, that it's going to be life-changing for the guy who serves coffee and who are our drivers. So money has to be life-changing. So give them more. In fact, the first time we did a payout, which is so less that we could sell, we nearly democratized it that there were only 2 slabs, 1 and 2. Yeah, because we said it has to be life-changing at every single level. And one of the things that I was in Mumbai recently and a driver's been there for 7 years and he's a shareholder. Yeah. So I asked him, I said, so kya kiya paise ka jo mila? He's saying, साहब बीवी को चिकनगुनिया हो गया था, 1.5 लाख रुपया लग गया वहां पे, वो कर्जे पे लिया 3% इंटरेस्ट से, तो पैसा था। मैंने कहा तुम्हारी तनख्वाह तो अच्छी है यार, तो फिर ऐसे क्यों? किसी उससे पैसा था, वो बेटे को पढ़ा रहे थे साहब, तो फीस दें या बीवी को बचाएं, तो दोनों करने में कर्जा लिया, तो जैसी पैसा है ना, मैंने वो कर्जा दे दिया. And the 3 CXOs in the car that time, I said, this is what is life changing, really. Yeah. So not amazing that the CEO makes 10 crores on the ESOP plan right now this year. Yeah. Of course he should. He deserves it. Sachin is absolutely a great CEO, deserves it completely. But right now, as the pool comes in, so if you, and I told them, I said, one day I'm not going to be there, guys. Guys got to run it. Okay. And then when you run it, always, if you keep that in mind, then your organizations from top down, from the bottom up, will always be great. So if you do that, I think that works. On the board, to answer your question on the board, when you run a company, my thing is, what new thing is this person going to add on to the board? Yeah, which I am not aware of, or which is not my skill set. Or does this person come from a very different background that I come from? So investors, of course, they have to come on the board. So, and the second most important part is select your independent directors very carefully and select people who are of character, who can add value, and who have depth. And that, when they speak, you really look up to them because you learned or you're learning from them. I think that's the second point I want to make. The third point I don't know how to fix on the board, but I'll give you a real example. So one of the lovely conversations that I've had over the past few months, not for investment, but just like that, is that I'll give you a real name, Shailendra Singh at Peak 15. Yeah. Right. Shailendra's not invested either in EazyDiner or Postcard or whatever, but I've had absolutely amazing conversations with him on the future, on everything, and it kind of brings in a lot of wealth onto the system. And I always tease him, well, you never bagged any of our companies. So he says, no, I never said no to any of the companies. Okay, and we keep on talking about it. But it'll be so amazing to have a guy like him on my board, even if he's not an investor. Yeah. Because the conversation is so enriching intellectually, thought-provoking intellectually. Yeah. So even when he was on a holiday, and I just pinged him and we just spoke for an hour. It's just general stuff. So I don't know how to do it because I think it's a fiduciary responsibility to be on 20 other boards because we as invested. Yeah. Okay. And I think somewhere there, one is, I don't know how to do that, but get great people like him. Second is to get very good entrepreneurs. Yeah. Agreed. Yeah, who've kind of executed, built, whatever. So when I heard Manish at Purple, like we met him when we came into your office, speak out, I kind of reached out to him separately. I said, listen, I just want to have a half an hour chat with you. What did you do? How did you do? Because I think, because they've been through this journey, and they've seen the pain and the trials and everything and all, it's absolutely so much to learn. Yeah. One thing I personally avoid today, even on the board or even in meetings, so I get, you get invited to a talk every third day. And the thing is that, most of the seminars on entrepreneurship or on the hotel space are sold like what I call Diwali hampers. Yeah. So the media house or anybody kind of bails a hamper saying Shantanu is my wine, Deepak is the second white wine, Kapil is the packet of chips, and this is a lovely hamper. And he sells it to an advertiser, and everybody goes onto the stage and people have to speak and they keep on talking. So one thing I really avoid when this is, I don't want to be part of a Diwali hamper. Yeah. So you need to add value, and the board members I need on the board should also not be Diwali hamper types. Yeah, they have to have real depth and can contribute really to the depth of the company. So my independent director is Arun Kapoor, who kind of founded Vasant, part of the founding team at Vasant Valley, now works with the government of Bhutan. It's got nothing to do with hotels or with EazyDiner, but a man of real depth, intellect. Absolutely a joy talking to him on anything. Yeah. So he's the independent director on the board, phenomenally well respected. So it's so much to learn. No, I think it's very important there.
I agree with you completely. I think even with Shailendra, for example, Sequoia has actually had a fairly difficult time on the corporate governance part. A lot of the portfolio has kind of turned back, and I think they are now taking tremendous steps to make sure that I spoke to Avnish at Matrix, Z47. When he's like, boss, we have to coach founders on how this happens.
You have to coach.
You cannot learn this too much.
It goes back to what you said. It's so easy to start small, which is actually in the scheme of things immaterial. Yeah. But that's where the rot starts, right? Yeah. So you've got to be cleaner than clean and just reinforce it. Because as Kapil said, because you're surrounded in India by so many negative examples of large and small companies who are openly doing it, that people think it is how you do business.
Yeah, it is cool to do it.
When I bring, like I said, most of my investors are not Indian. Yeah. You bring them into India, even they think, how do you facilitate? I said, we are trying to change that. There's no facilitation. Unless you eradicate that, you will never become a first world country. Even if you try and eradicate that, there's some bad actors. But unless you honestly believe, preach and practice it, you will never get there. So again, it is something we reinforce over and over. And I know often it will not get through. Yeah. But there's no shortcut.
Yeah. I completely agree.
And you cannot condone it. The minute you catch hold of it, you make a public example. You do not do it behind closed doors. It's not like, okay, don't do it again. It's like
have good auditors.
Full flogging. Full flogging for the company to know it's not acceptable.
Yeah.
Because the minute you hide it, someone's going to find out, then they're like, absolutely, it will become much worse.
Absolutely right. Because the moment these examples come out,
everybody gets
SHAs
painted.
start becoming
it's like,
super tight.
So, and I still remember we were talking about it yesterday. I was in Champagne, it's a like lovely region of the world, and I was going to go to Champagne. These guys called me saying, these 3 points we can't do it. I said, then let it not be, man. But that's a big weight on a founder, that because of you, because they want to pull you, you may be sacrificing or maybe not doing the right thing for the company. And I thought about it a bit, and I said, no, I'm not going to have a great working relationship with you. If that gets compromised, I can't do it. I said, I'm out. She's like, are you serious? You're pulling the deal now after 4 months of diligence? I said, yeah, because your clauses are ridiculous. So my point is, go find me one case of corporate governance, 10 rupees here and there. Just find me that, and I'll take your points. But in 4 months, if you've not been able to find something, I'm sorry, I'm not going to be taking that just because somebody else has done it. That's their problem. Their board defaulted. Their auditors defaulted. The founding top team management defaulted. Everybody defaulted. I am not responsible for it. And I don't think so. You should be, because you were not on that board. So just stay out of it. 2 days later, they called and said, no, we completely agree. We understand. We will sign. I said, great. But it's not going to happen. So because, again, I think you need to...
There's not a negotiation tactic. This is real.
Yeah, it's real. Actually, I think you have to be... But it's just the way you run the company. And I still think, where VCs in India get it wrong? 2 cases, very clearly, okay? One, they do not understand incentive alignment.
Yeah.
You know why? Because most of them now run businesses.
Yeah.
Yeah, most of them are passed out from these fancy colleges. Okay, they think they know everything. Deepak's run a business. Deepak's in 25 years. Most of them, have passed out in fancy colleges. Most of them, like Deepak, have worked at Bain, okay, or any other of these top consulting firms, okay. No, Deepak knows it, but I'm just saying. So, when you have not run a business, so you don't understand how incentive alignment happens. Yeah. You don't understand how a culture is built. So I think a lot of people get culture wrong too. 2 things in life I believe you can't fix: culture and caliber. Culture and caliber can't be fixed. अगर आपका caliber ही है ना, तो आप उसी पे ही काम करोगे. कल्चर और कैलिबर को फिक्स करने की कोशिश ना करें. या तो है या नहीं है. Either you have it or you don't have it. I think that's what I've learned in life. Maybe I'm totally wrong. Like I said, all my views are totally personal.
Yeah.
Okay. So yeah. So my point is, culturally you're incorrect. Now, so even when we are hiring at Postcard today, and we're saying this guy, and this is a 9.6 on Booking.com company, which is higher than any other brand in the world. Okay, and they all come from a good brand. And one thing I just asked them. At the interview last step, HR is just supposed to answer one question. After the interview, did you feel great about this guy or not? Did you feel great talking to him?
Yeah.
Okay. And the answer is technically very sound, very good. No, didn't feel great talking to him. He's got to go.
Yeah.
Because that's culture. Yeah. That means intrinsically, he's not a nice person to engage and chat and talk to people. Yeah, he's intrinsically not right to engage and chat and talk to people. So if that is the case, then you'll never be in hospitality. Maybe you should do something else. There's nothing wrong with it. But in hospitality, you need to be genuinely interested in people that you're talking to. ये मजा आ गया बात करके. अगर आपको मजा नहीं आ रहा, आप इस लाइन में मत, आप कुछ और बन जाओ. बहुत सारी और चीजें बनने के लिए. So I think culture, and so one thing they get this wrong. I think the second part, a lot of VCs don't understand that actually building the brand will take time.
Yeah.
Okay, I think a lot of them get either impatient or, so everybody tells me we are in for the long term. Okay, then they start asking you revenue numbers.
Yeah.
Okay, जरूरी है, but ये इसके बाद कितना grow करेगा, फिर इसके बाद कितना grow करेगा, फिर इसके बाद कितना grow करेगा. So you have to decide which place you got to be. And at one level, and the learning for entrepreneurs really is build brands that don't need an infusion of capital always. Yeah, I think it's that's the way to really build. I tell all the young people I speak to, यार अगर सामान बना रहे हो तो बेचो, डरते क्यों बेचने से? So one of the quick questions that I asked you in quick commerce was that I've had brands whose GMV is equal to the ad spend on quick commerce.
What are you saying?
I'm telling you. I can tell you 5 names.
Nahin yaar, that's what.
I'm going to tell you 5 names. He'll tell you. He won't say it, but he knows.
Probably doesn't come up to me again.
But क्या हो रहा है? These are 2 companies now, unlike Amazon and Flipkart, or unlike Ola and Uber, or unlike...
No, I'm saying it's not their behavior. It is the behavior of the brands.
No,
जरूरत क्या करने की?
नहीं, ये क्या हो रहा है? कि now these guys are now building in public. So now their profit and loss is going to be scrutinized.
Correct.
They have to make money.
Yeah.
Correct.
Now they're also giving tremendous growth. So a brand like me, would spend 30-40% of my revenues on Amazon and Flipkart in 2016. So if I were to start Bombay Shaving Company today, and Blinkit is saying, boss, मैं तेरे को 30 लाख महीने का, मैं 3 करोड़ महीने का कर दूंगा, because I'm launching these 200 stores, but to invest all the revenue back in me. If I've raised money, I will probably do it. If I've not raised money, I won't do it. But that's the thing. If I'm not raised money, then I will feel like I've been left behind because there's this new channel that's developing. So they have become a lot more profit focused. The founders have been.
I think the founders have to understand that. So I always tell them, I said, guys, listen, if you can't build it in a day, like Deepak said. No, you can't build it in a day. It'll take time. And if your product is good, people will come for it. I say the same for restaurants. If your food is that great, you don't actually need to give a discount. You just don't need to give a discount. It's okay. Hold it. People will come. It's great.
But what do you think about this? The point Kapil made on VCs not being operators. And I think for someone like you, you've been doing VC for 20, 25 years.
He's an operator, I think.
So now, even if you have not operated an actual business, you've seen so many cycles and so many companies that now that pattern recognition becomes very valuable to, like he has seen 3 companies, I've seen 1.
Okay.
So that pattern recognition becomes very valuable. But for VCs, like it's still a place which is it's a young industry. And most of the folks are not tenured partners or tenured GPs like you. They're kind of doing it for 3 years, 4 years, 2 years. So even though, and they're trusted custodians of capital also. But do you think that the industry also has to evolve in terms of...
It is evolving, right? I think I can only tell you what we do at DSGCP, right? We tell everyone it's an apprenticeship. No matter what your background, how smart, not smart, what schools, it's an apprenticeship. Then each firm has a different philosophy, different culture. Just because the culture doesn't suit me doesn't mean that you fit somewhere else. Because and the culture of a firm is driven by the founder or the founding team. I have a particular style. When I interview people on my team, they might be amazing people, but if I don't gel with them, I'm like, I'm 56, I'm going to work for another 10, 15 years. If I don't have fun working with the person,
no point.
So I believe I only hire 1% a year. They're enough smart people. So fit trumps everything else. Because everyone else can be trained. So once they're fit and they are learning machines and are willing to work off first principles, I'm very confident that my current team can mentor them and coach them if they want to learn. So our job is to filter out the people and find the guys who really want to learn and are willing to learn in a apprenticeship model. Not everyone works in that way. And I keep telling the guys we reject, saying, guys, nothing's wrong with you. You just are not the DSGCP type. When I was sort of out of college, and so I had offers from McKinsey, Bain, and Goldman. So the first decision was investment banking or consulting. I chose consulting. And then very quickly I realized the Bain DNA and the McKinsey DNA could not be as different. And I gravitated towards Bain because it's sort of who I was. If I had forced myself into the McKinsey mold, which I never did, I don't know whether I would have thrived or not. And there's nothing wrong. I keep telling everyone is amazing as an individual. You just got to find the right fit for you. Don't force fit yourself into a particular firm because you think it's prestigious or not. Because if you do not enjoy it, you're gonna hate getting up in the morning and going to work, man. It's just and I honestly believe that. And I often coach people in my firm or where I worked in the past. But at second or third year, I can tell, I love you as a person. I hired you culturally, but this firm is not for you because I think you'll be better off in that firm. And we help them get there, not because they're bad. They will thrive better in that firm. And our job, especially in a small firm, I want everyone who has worked at DSGCP, whether you're an intern, analyst, associate, I want you to leave and be a torch bearer for the firm. Because the only thing we have is our reputation, right? What is venture capital? The capital. Money is fungible. The only reason an entrepreneur, whether it's Bombay Banta or Go Zero, will want to work with us is because we bring a reputation. And once your reputation is tarnished, game over. You can be building it for 20, 30 years. It doesn't matter. It's gone. That's the only thing I reinforce. I said,
proof of the pudding is my daughter Drisika interned at DSGCP for 6 months. Just finished her internship towards the end of December.
And how did she find it?
It was fantastic learning and whatever and everything. And just kind of a logical way of thinking, which I think is absolutely amazing. So she's studying hospitality at EHL in Switzerland. And I told her, you have to intern in VC. You need to know how deals are rejected, how capital is allocated, how capital is given, the cycles that a company goes through,
Yeah.
and how do investors and companies come together. Because if you learn that, and you learn good food and good wine, you'll do pretty well in life.
Good business, yeah. Especially cheese.
Especially cheese.
Especially cheese. I'm still disappointed you didn't bring the cheese. Aren't they on Zepto or Blinkit?
No, because they're artists. To talk to these guys will take time. They've been. So in every single DSGCP event, I called up Hari and I said, get the Spotted Cow guys also in. I know it's not a portfolio company, but just do it. And he said, of course. So these guys went. And at the end of the day, 3 major quick commerce players. Where is it listed? 0. Because they're artists. वो बना रहे हैं. This like Adit Palicha should call them and say, hey guys, can you guys come in? Because Zepto's profile will go up if your cheese is featured because it's so world class. Okay, and that's not happening. I think it's not there.
Maybe after this podcast it might.
It might. Maybe after this podcast, maybe Adit calls.
That's what you would have done.
And Alvinder calls and Harsha calls and says, hey guys,
they will call.
It's
they
like,
will call, but the 2 artists will still be artists.
Yeah, they'll be artists. So artists don't have time for commerce.
We will make what we make. If it sells, it sells.
Yeah, it sells. Yeah, that's
I met them. They're fantastic.
Yeah.
And if you haven't tried the product,
you should try
There is no way I won't. I'm sure it's getting ordered also.
It's the best. Really.
But sorry, go ahead.
No. But I think it's also I think about travel and hospitality all the time. And neither do I have the time to be a venture capitalist or not to do anything else because so busy running 2 companies. But just look at travel and hospitality. So much has not been done. India doesn't have a great vacation rental company. Yeah. India doesn't have a great hostel company. Think about it. Nobody's built the best hostels in the world.
We try to do stanza and so on.
Yeah, but the best hostels in the world. I'm saying world. Yeah. So when we say Postcard, we say it's very good and whatever. But we're giving validation. We're saying, see, we were 9.6 on booking. Anybody else who's higher as a chain, please tell us. We'd love to learn from them. Okay, so best in the world. So not best in India, best in Delhi.
And we have so many, the good part about hostels, for example, I was like, you just build it in Kota and Hyderabad. That's it.
Yeah.
You don't have to go to a third city.
I agree.
Yeah. So I think, it's not about co-living and all, but just think about it. You want to go to Goa, which isn't really... So I'll give you an example. When my daughter had to intern at DSGCP and stay in Bombay, where does she stay? Think about it. She's only coming for 5-6 months. You can't take an apartment on rent. Who's going to come, clean, whatever. So is there a great space which is safe, clean and hygienic?
Yeah.
Answer is none. Think about it. There's none. So I had to really put her up in a hotel where you should do Monday to Friday, come back,
Are you serious?
Where else? On 5 months, I take a apartment on rent, then she has to travel with the team or travel with me or whatever. But, it's just not possible. So just think about it. So there's vacation rentals, there's hostel. So I think there's so many spaces, even when I look at travel and hospitality that have not been built out. I don't know what's the model to build them out. But there's so much to build in India. There's absolutely so much to do. And like what he did so many years back with just doing consumer, which is amazing. And I was in Nashik last week.
Yeah.
And I was telling him that I should just salute Rajiv Samant. So first of all, to do where he did what he did, and 20 years back to say, you know what, we're going to do a vineyard.
You didn't like Nashik?
Yeah, it means Nashik overall as a city is beautiful, but the part where Sula is, and all the parts surrounding it is nothing great, boss. Okay? If you've been...
You can't have a postcard bar on these things.
No, not postcard bar. No, we will have a postcard there for sure.
No, but the bar can't be
bar boss. The bar is any wine country in Spain, Italy, France. नहीं, हर एक हो सकता है. ये हमारा सोचने का ढंग है कि नहीं हो सकता. बिल्कुल हो सकता है. Okay, so my point is, भाई वैसे करो. अब वो बाहर का सब कुछ ऐसा, और उसने फिर भी सोचा 20 साल पहले कि मैं यहाँ पे वाइन बनाऊंगा. Amazing है, मतलब शत प्रणाम है. क्या बना है? So I think that's the visionary power, and I think Rajiv Samant is actually an artist. And I think a lot of people like Deepak and everybody came in together
to make the artist
into commerce. And honestly, and that is where a VC also gains. Yeah. Deepak, for me, if I speak about Deepak, the first thing I tell about to people is that he spoke about, he funded Sula. Yeah. That's huge, man. Yeah. Means doing EazyDiner in 2013 or Veeba in 2013-14 is okay, great. Yeah, they're great companies, good founders. They would have done it, kar lenge. But Sula is his crowning glory, in my opinion.
Yeah.
He may still think whatever, but my thing is Sula for me. So that makes him more competent than I am. The other things don't. So just Sula, just the wine, without the cheese.
We'll do both. Again.
But what's your view on India? Like before I know we've taken a lot of time and you're a hard stop, but you are clearly long on India. You've never lived, you didn't grow up here. You didn't study here.
No.
You came here as a professional.
I came here as a professional.
Lived for a while and then you kind of continue to invest here.
Look at the bit. I was in Singapore for 21 years. 3 million people in those days. great city, but it was tiny.
Small.
Then I spent 17 years in London, which is the other extreme of sort of cosmopolitan living, lived in France, sort of worked around the world, and then came to India because my boss said, "You're Indian, go." And I started discovering India, right? And there's nowhere else with this much energy and this much potential. Indians work hard. Now they believe in themselves. 20 years ago, and I remember me and Rajiv having this conversation. I'm like, I said, even after Sula was launched, I went with him on some sales calls to the Oberoi, the Taj. And the F&B manager said, "Bro, I'm an Italian restaurant. How can I serve Indian wine?" No one was proud of being Indian, and no one was proud of buying anything Indian. Every five-star said, "I have to be imported." Made in India was always second class. Always. Not even once was it first class.
Yeah.
That has changed. Indians today, all things being equal, would rather buy made in India. They're immensely proud of being Indian. And they now genuinely believe that India can build anything better. We are not reliant on the world. In fact, the world should be reliant on us. That change has happened in the last 20 years of me sort of following India. If I have a critique about myself, I would think I was 10 years too early. But I think the next 20 years are going to be the golden era. There'll be ups, there'll be downs. But to be successful, you need to be confident in what you're doing. All the smart Indians used to go abroad and never come back. Then they went abroad and came back. Many are not even leaving now. They said, "Dude, there's so much. We have great education. We have great mentors. We can build global businesses of India. And we don't have to build global businesses. With 1 billion people, you can build immense businesses." And India's soft power hasn't been seen yet. So again, I had to give a talk to the L'Oreal board a few months ago about what 2040 will look like. And I said, you need to forget, India has Bollywood, it's got cricket. The Indian diaspora is the second largest in the world after the Chinese diaspora. And the soft power we have through Bollywood, cricket, music will surpass Korea or Japan.
Yeah.
And look at the soft power Korea and Japan has today.
Yeah.
In 2040, the world will be talking about Indian beauty, Indian music, Indian shows. It's going to be
Indian hotels.
Indian hotels.
Yeah.
India will rule the world. I am convinced. And the brands will be Indian, and most of the brands in 2040 don't exist today. So we have an opportunity in the next 10 years of backing the brands that will be global in nature. Because people forget soft power. What is K-pop? What is Japan beauty? It's the soft power. Because Korea and Japan had the soft power. It's
cultural globalization. Yeah.
India is.
Yeah. We already
just
did
watch
it, like
what's
with
going to
yoga,
happen.
Ayurveda. We've done it for some time.
I know, but
But you still don't own it.
You have no idea how big it's going to be. People do not realize what the tidal wave is coming. It's going to be Indian, and everywhere you go in 2040, India will be everywhere. The same way K-beauty, K-pop, we're going to export like crazy.
Yeah, I hope so. Like,
I know so. Okay, it will happen.
we need to start making stuff here, though. Like, we need to really start making stuff here.
It will happen. But the soft power is not about making. Soft power is about exporting your culture, exporting your music, exporting your art. What is so special about K-pop?
Yeah.
Indian musicians are amazing.
Yeah.
Okay, and it's only been exposed to the Indian diaspora. The global diaspora has not. I mean, Sufi music on its own. If you give Sufi to people who've never heard Sufi, they'll be blown away.
Yeah, absolutely.
Yeah.
We've done a bad job. India Inc. has done an awful job marketing India Inc.
On everything. Forget
on
about
everything.
On everything. Look at food.
Absolutely.
Look at food. Like I always keep on saying at Postcard, the croissant is not an Indian bread, it's a French bread. India has 128 indigenous varieties of breads.
Correct.
So at the Postcard in Goa, we serve pui. In Mangalore, we serve the Mangalore bun. We don't serve croissants.
We just
It's not an Indian bread. Air India also serves croissants.
We haven't done a good job yet. And it's happening because everyone has now taken it upon themselves that, you know what? They never did it because they were not confident.
Yeah.
Now they are absolutely
Confident.
Some are getting overconfident and cocky, but it's better than not being confident.
Yeah. Absolutely.
Exactly.
It's coming. And that's why I'm excited. I told my son just turned 18, and I told him, if you have a chance, go and work in India because that is the future. So let's see if he listens to me or not. Probably not. No one listens to the parents.
What about you, Kapil? Like, what's your view? You're an entrepreneur.
No, so
building out in hospitality and food in India. So clearly bullish.
I think we have not captured our culinary diversity very, very well. I think our food is absolutely unreal, crazy. Yeah, you eat the food in Assam to eat the food in Mangalore. It's as different as Chinese and Italian, but it's absolutely amazing food. I don't think we've done anything with the culinary diversity. So Postcard is also. I always tell them we are an innovation lab. We're an innovation lab on hospitality. We are an innovation lab on service standards globally. We are an innovation lab on products. Ask Deepak. So I gave my team a task and I said, guys, you need to make tea, which is better than TWG. Because the best tea is in India. And we've lost that story to Sri Lanka because of the tea trails and the tea hotels. I opened the hotel in Northeast, even if I would lose money, because I wanted to make the tea trail in India. Okay, that is the reason. So we did a tea called Merchant of the East. I don't know if I've shared it with you, but I'll share it. You must have seen it at the hotels when you went to the hotels. So at the Merchant of the East, I gave it to him. I said, Deepak, there was only one brief that it should be better than TWG. I don't know what's your
It's
view.
much better than TWG.
So
and it's not flavored. It's all
fresh, sourced from the best growers.
It actually is
expensive to make, very expensive to make, but it is better than TWG at a fraction of their price. So I have a very clear view that the best stuff has to come out of India. So my point, everybody tells me, is this globally number one? If it is not, then don't show me.
The best products are coming out of India. They've been coming out of India for
but we've not
decades.
But
you go to Harrods.
Yeah.
It's all like
so this tea was exported to Harrods.
Correct.
Exactly. Never
Someone's
been
found it, taken it, given sourced in India, but branded British.
Branded British. So
India
the second thing that we're doing now, and coming on to the point of wine, and Deepak couldn't taste it, but I think we've done the best red wine in this country. Again, the most expensive wine, done only for Postcard, single varietal Cabernet Sauvignon. I've been working on that wine quietly since 2019. It's ready to drink last month. So if you have the patience to wait for 5 years and say make your own wine instead of just saying, "Acha, aap wine bana dena, main label laga dunga." That's a different game. No. You got to work on it. I just told them I want a single varietal grape, which is actually even more expensive to do because you do 10.
You don't blend. It's hard.
You don't blend. It's hard. You can get everything wrong. Single blend. Then I chose Cabernet Sauvignon, which is very, very, very rich, and in the making since 2019. And I paid the vineyard everything up front and said every single bottle is mine. And I bought the whole lot, the entire lot. If you've got that level of patience, focus, and excellence on India
and conviction,
and you say, I'm going to do this and I'm going to make it the best in the world. Because I told them, I said, this has to stand against the best Cabernet Sauvignon at this price point. Of course, it can't stand up against the Premier Cru I've gone through. Has to stand up at this price point. People should say, man, it's absolutely amazing. That's great. And if that means you can only make 200 bottles, so next year they told me now we can make 400 bottles. I said, tell me, I'll send the check, I'll buy the entire lot. So entire lot is bought by me. And in 2 weeks, in 10 days at one of our hotels, we sold the entire lot. We're shipping it again. And it's expensive. It's Indian wine, retail at, close to 8,750.
That's crazy.
Yeah, and sold out. You can't get a bottle. And now the vineyard which made it for us said, our owners only want 20 bottles. Can we buy 20 back? I said, yeah, of course you can. Yeah, okay. But that's what it is. But do you have that conviction on doing that? So even the tea at the Postcard Hotel is 8 times more expensive than the tea used at any luxury hotel in India. 8 times more expensive. But I will give my guests the very best in the world.
So
this is our one shot.
Make the best.
So my one shot to everybody is that it has to be the best. One of the things when I used your razor the last time, and not because we're on this podcast, was that it has to be better than Gillette sauce. Has to be. And I thought the experience was better than Gillette. I shaved with it for a month. And I'm using Gillette for 20, 25 years. And you told me your target age group was 25 to 30. And I'm not 25 to 30. I know I look 25 to 30, but I'm not 25 to 30. Yeah. Okay. But I had no qualms changing it. So my point is, I think so it's just a mindset thing. I always tell them, I said, if EazyDiner has to be, you make it the best eating out platform in the world, guys. Tell me what the best platform does. They said, but the US has 32 dining cards. I said that India needs to have a dining credit card. That's why I did a dining credit card. If American Express in the US, Chase Manhattan, Sapphire, everybody can do a dining credit card. And if the first use case of a credit card in the world was to pay a restaurant bill in 1953, then why don't we have a dining credit card? Diners Club. Yeah. So why don't we have it? So let's do it. I don't care if anybody else has done it or not done it. And today it has 1 lakh card members on that dining co-brand credit card. I think it's the 6th largest co-brand in this country. Yeah. So our point of view is there's just one underlying feature. I look at my guys and say, tell me, is it the best in the world? That's our one shot to do, Shantanu. I think it's our one shot as a part of this generation to leave a legacy to say, can we make the best in the world in every single category in this country? And if we do that, that's a tribute to India. I think that's a tribute to India. And you do it in the right way. You make sure everybody's a stakeholder. You make sure your incentives are aligned. You make great companies out of India. And I think that's the legacy we leave. And we end there.
Amazing. Thank you so much, Deepak, Kapil. You guys have been such a privilege to host you.
Thank you.
I hope you guys had fun on this.
Absolutely.
Lovely.
It's a great format.
Always great format.
Yeah, and
It's a great format.
Yeah, and we are
And it's freewheeling. It's actually a very good format.
Yeah.
Well done.
Thank you so much.
You should listen more to entrepreneurs.
I do want to show you though. I do want to show you guys this, the one that Kapil is talking about. You use the one which we gave you in the hamper, right?
I use the one that I gave in the hamper, but get me that one because that's what we want to do.
Is it better?
No,
But this is the one we give in hotels. I'll tell you what I love about this the most. We showed this to Kapil last time. Whenever you go and stay in a hotel, and you ask for a shaving kit, you're typically shaving with your hands wet.
Yes.
Okay, and they will give you a sachet, which is very similar to a Veeba mustard or a ketchup sachet, right? Which is fine if it's got mustard and ketchup because your hands are dry. But in the bathroom, your hands are wet.
Correct.
And if you tear it, and the gel kind of just goes all over it, it spills in the basin. So we made a product that feels like a credit card. It's kind of.
Take out the gel. Let's see if you can figure it out, buddy.
Fold in half and press.
On the other side. On the other side.
Only on this side. Oh, cool.
Yeah.
Yeah. Sure.
Very cool.
I'll take it out here.
This is your packaging innovation?
Yeah. Again, inspired by Japan. That's how they do some of the stuff. I think Viraj will love this packaging as well. You just fold it, you squeeze it out completely.
It's better, no? Because very difficult to even open the sauce sachets.
Correct.
Turn it upside down, you can squeeze it out. Squeeze it out. You can squeeze it out. Yeah. There.
Look at that.
No, this is very interesting.
And your hand is totally
The
dry.
hand is dry. There's no need to peel, no need to do anything.
And the brand is so much better on this compared to like a plastic sachet. So this is what the Postcard hotels.
This is what the Postcard hotel has, right?
What's the cost of this? The packaging?
I can't tell.
Not the product, it's the packaging.
No, you can. Yeah, I mean, come on.
All
Not
this
that
put
bad.
together is around
Yeah.
6.5 rupees. The gel plus the pack is most of it.
Can we just do that? Can we? Yeah. I just want to maybe shoot this. Huh? One second. I want to shoot this.
Please. If Kapil is selling our product,
How can you say no?
Yeah, okay.
absolutely.
So, okay, let me do this. Okay. Okay, just show me that one also. I need. You have another pack of this? This one. Okay. Yeah. So okay. So this could be a separate one. Okay. So I always talk about being the best in the world. Yeah. So we do the best teas. We've just come out with a single varietal Cabernet Sauvignon, which is the best wine in India, not available anywhere else. We kind of waited for 5 years before we bottled it. And, we just changed our shaving products. And very proud to be supporting Bombay Shaving Company because they do some great product. So this is the shaving kit that you see at the Postcard Hotel right now. It's got great packaging innovation. It's got we love this wooden handle. So we kind of went with this. And this is great. Yeah, it's absolutely great. I think once I stayed, I think it was the Mandarin Oriental in Hong Kong. And they had a nice Bulgari razor, if I remember correctly. I'm not too sure. But it was quite nice. And I think this is as good as this, which is fantastic. But you know what? Shantanu, the businessman that he is, he's selling it to all hotels now. Yeah. And when, our journey starts when everybody stops thinking. Okay. So this is great. But you know what? This is going out of the Postcard Hotel. We're going to take this out because what we want to do is, let's give you the best razor in the world. The main Bombay Shaving Company razor. It's going to be expensive, but what have we ever told you at the Postcard Hotel? If you like it, if you love it so much, take it home. So this is such a great razor. You can take it home, but this is now going to be the standard razor when you stay with us at the Postcard Hotel. No other hotel in the world does a better razor. If they do, you know what? Just tweet it to me and say, this hotel does a better razor than what you're showing. But this razor makes a debut soon at the Postcard Hotel. Shantanu's latest innovation is already passé because it's great for India, but not the best in the world. This is the best in the world. The real Bombay Shaving Company razor. Stay at the Postcard Hotel, get one free. Lots of love, guys.
That is so cool. You sell better than I would.
Yeah, naukari bechne ki hai.